your money into stocks. We can't give you the exact day, but sometime the bull market will start again and you want to be in on it.
Thank you. So I just put my slide up again. Yep. Let me just hang on there first. Let me just put my slide back up again over here. Yep. So that's Sir John Templeton. Let me just put my screen up. Yep. So today we are really very, very fortunate and lucky because nobody can speak more about the Templeton's way of investing other than Sir John Templeton himself. But unfortunately, he's no longer around. But the next person that I could think of is actually the great niece of Sir John Templeton. So let me do an introduction of Miss Lauren Templeton. So she is the founder and chief executive officer of Templeton and Phillips Capital Management. And prior to founding the company, way back in 2001, Lawrence was employed with Morgan Stanley and a couple of a hedge fund management company based in Atlanta, GA. She's also the author of Investing the Templeton Way. This is the copy of book that I have. I'm really lucky because this is an autograph copy, so it's priceless. So Lawrence is also the great niece of Sir John Templeton and is a current member of the John Templeton Foundation, established in 1987 by the renowned international investor Sir John Templeton. And of course, Lauren Templeton began investing as a child under the heavy influence of her father as well as a late great uncle, Sir John Templeton. And I'm really, really, really fortunate to have met Miss Lauren Templeton herself way in 2018. This year is 2014. It's been a long 6 years. So finally, after 6 long years of waiting, I finally get a chance to learn from Miss Lauren Templeton again. So ladies and gentlemen, can we put our hands together and welcome Miss Templeton? Yay, she's already here. Awesome. Let me just stop share. Okay. Lauren, maybe you'd like to test whether is your microphone working?
Yes, can you hear me?
Yes, loud and clear.
Okay,
Yeah.
I'm going to attempt to share my screen.
Okay.
I have multiple screens, so we're going to see. I'm going to see if we're going to share the right one here.
Okay. By the way, for the audience, just to let you know that Lauren is sharing her wisdom, right, at US Central Time. So it should be at night over at the US. Oh.
Let's see. Do you see the screen?
Yes, it's all good.
Okay, and can you see my notes or you can just see the screen?
Just the screen. I cannot see your notes.
Okay, good. That would be really embarrassing if you could all see my notes right now. But I do have some notes that I use, and I have kind of a strange configuration of my computer tonight. So you'll have to bear with me as I make it through this. But it's a pleasure to be with you again. The last time I participated in an investify symposium, I was actually physically in Singapore. I had the great pleasure of traveling to Singapore with my daughter. She was probably around 8 years old at the time. And so it was, and it is a beautiful memory that we have traveling through Asia together and going to speak at the last investify symposium. Lots of great memories. So I appreciate being asked back and joining you virtually. I'm joining you this evening from a mountaintop in Tennessee, and we have had a week of snow and ice, and we've had no power at some points, and it's been difficult to get the car out, but I have made it to the office, and I am here with you now, and very pleased to be so. So my presentation tonight is called Investing the Templeton Way. My husband and I wrote a book many, many years ago. We actually wrote the book on our honeymoon called Investing the Templeton Way. It's now been translated into many languages. I am the great niece of Sir John Templeton. I have spent almost exclusively my entire career studying his investment philosophy and going back and analyzing his trades, his successful trades, the mistakes he made, the context in which he made the decisions. And so that's what we do for a living. We have a newsletter called the Maximum Pessimism Report, and I have a podcast, the Investing the Templeton Way podcast. I also have the great pleasure of serving on several corporate boards of publicly traded companies, and that always helps me in becoming a even better investor. I think if you have if you work for a company or you run a company, I think it makes you a much better investor. But let's start with just some background information, and some of this will be similar to what Caden has already shared with you, but I'll throw in some family stories along the way. So Sir John Templeton was born in 1912 in a very small town about 60 miles west of where I am tonight. I also was raised in the same small town. He followed his brother's footsteps and attended Yale University. And during that time at Yale University, after his freshman year and going into his sophomore year, his father sent him a letter and said, his father set him down and said, I can no longer fund your education. I can't even give you one more dollar. I cannot pay for you to go back to Yale University. And luckily, Uncle John had an uncle named Watson Templeton who took an interest in his education and funded his trip back to New Haven. But he would have to find a way to pay for his own tuition. And so Uncle John did this by keeping his grades very, very high. And he obtained several scholarships. And he also took various jobs and also played poker. So he was a very good student of probability. And that's how he put himself through Yale University. And I think it's an important story to note because this particular tragedy really influenced him. He said, if it hadn't been for that bad news, I would have never pushed myself to become an excellent student and the hard worker that I was at Yale. And I would have never gone on to obtain a Rhodes Scholarship. He was a Rhodes Scholar and he attended Balliol College. So I think it really was one of the first examples that he had in his real life that trouble is opportunity, that not all bad news turns out to be bad. Some things happen for a reason and can be great blessings in the long run. So I think it's just a good reminder for all of us because I think we all go through hard times in our life, and sometimes those moments lead to the greatest blessings, and that's true in investing and it's true in life in general. That certainly was his perspective. But he was named a Rhodes Scholar, and he did go on to Oxford University, where he graduated with a degree in law. After that, he went with a college friend on a tour around the world. He even ended up at the 1936 Olympics, where he saw the building contingency of Nazi soldiers. And that eventually led him to his first trade in maximum pessimism that Caden referenced in the intro, which was when he borrowed $10,000 and he bought 104 companies trading on U.S. exchanges. 34 of those companies were in bankruptcy at that time. And people said, well, why would he have done that? 104 companies trading for less than $1 on U.S. exchanges with 34 of them in bankruptcy. And it's because he was a student of history and he had gone back and looked at past instances and knew that in the past, the government had typically implemented a wartime excess profits tax on profitable companies. So he thought that the weaker companies were actually going to be some of the better investments. And he did quite well in that first trade in maximum pessimism. He officially entered the investment industry in 1954. And Caden gave you some of the great numbers. I mean, he's known as being one of the greatest investors on Wall Street. I always tell people I was raised on a steady diet of BLTs, Buffett, Lynch, and Templetons. Those are all my heroes, and we admire them greatly. And of course, I have just a very strong connection and interest in John Templeton, as he was my relative. But let's start with a few quotes from him because I think it helps put everything in context and understand his perspective as an investor a little bit more. The first quote is, "An investor who has all the answers doesn't even understand the questions." Why this is important to me, this quote, is he always talked about being a humble person and having humility and intellectual humility. So, again, an investor who has all the answers doesn't even understand the questions. So if you think you have all the answers, it's not a humble perspective, I would say. A major cause of higher prices is higher prices, but when the trend is reversed, then lower prices lead to still lower prices. To buy when others are despondently selling and to sell when others are avidly buying requires the greatest fortitude and pays the greatest ultimate rewards. He's probably best known for this quote: "Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. The time of maximum pessimism is the best time to buy, and the time of maximum optimism is the best time to sell." Hence the name of our investment letter, the Maximum Pessimism Report. He actually was an incredibly optimistic human being. But I think he just learned over and over again that those points of maximum pessimism offered and afforded the greatest opportunities as an investor. People are always asking me where the outlook is good, but that's the wrong question. The right question is, where is the outlook most miserable? That certainly doesn't sound very positive, but the question we're always asking ourselves here in my office is, where are the points of maximum pessimism? So where is there maximum pessimism in the market right now? And I'll discuss some points of maximum pessimism later in my presentation. So, and the last, which really drives everything that we do here at Templeton and Phillips Capital Management, is that if you want to have better performance than the crowd, you must do things differently from the crowd. I know you guys have all had, basic math, and this is math. If you don't want to be average, you have to do something different. If you don't want average performance, then you have to skew that number one way or another by doing something different. So it's really important to remember, if you want to beat the average investor, you've got to do something different than the average investor. And we are always looking at that. That is our perspective. We are very numbers driven, just like John Templeton. We follow the numbers, and this creates a rational process that leads us towards potential bargains. Let me move this little thing so I can see. We are very methodical, and we run a bottoms-up process, and we let the market tell us where to deploy capital. So John Templeton was very much the same way. I think some people sometimes get confused and think of him as a macro investor because he's really well known for some big macro calls. He was an early investor in Japan in the 1960s. He moved the majority of his capital into the U.S. in the late 70s and the early 80s, when U.S. investors didn't really want to go near equities. The market had been abandoned. The media had proclaimed that time period as the death of equities. And that was the same time that he chose to load up his portfolio in U.S. equities. He was also really well known for his call on South Korea on the heels of the Asian financial crisis, which occurred in 1997. And he was investing in South Korea using various investments in 1998. So I think people hear these things and they think, wow, he's just a really great macro investor. He knew it would be Japan. He knew it would be US. He knew it would be South Korea. And that's not how he operated at all. He was very numbers driven, and he always let valuations lead him to his investments. So, his investments in Japan were becoming overvalued. He let them go, and the money moved to the US, where he was finding great valuations. And that's how he moved capital around the globe. And I think that's really important for all investors to remember. We always champion having a global mindset when it comes to investing, and that's very Templeton-esque. John Templeton pioneered international investing, and always encouraged investors to have the largest universe of stocks available to choose from. And when you do that, you can move capital around the globe based on valuations. I mean, it's important to pay attention to other things like rule of law and in certain countries, but it's also important to listen to the numbers and move from one investment to a new opportunity that's trading at a lower valuation. And that's how we see things at our company. So we're often investing in times of crises or points of maximum pessimism. Two that I can think of were the great financial crisis. That is a very interesting story for me, because that's actually when I had my first daughter and I was buying stocks in the delivery room. We saw that as a huge opportunity, and it really did make our returns for years to come. A most recent crisis that I'm sure you all were investing during this crisis was the COVID crisis. So at our company, we turned over about 60% of our portfolio within a 3-week time period in March and April of 2020. So we were very active during that time period, because we knew an event that large was a huge opportunity and would impact our returns for years to come. But we do look for these events or points of maximum pessimism in stocks and industries and countries. But always the best opportunities are when the entire world goes on sale, because there's some huge crisis. And that's our perspective. That's how we distinguish ourselves as an investor. So many investors believe that risks are too high to invest during these points of maximum pessimism. I mean, it's very common for people to be worried and get scared during these bouts of maximum pessimism. But we believe the largest risk to an investor is defined by overpaying for an asset. So in fact, that would be our definition of risk, is overpaying for an asset. And when something goes on sale, like the whole market goes on sale, that's actually the least riskiest time to invest. So that is our perspective here at the company. We have a multi-step process when it comes to investing. So the way that works is we start with the largest global universe we can find. So we want the largest universe of securities to select from. And the first step is to employ a quantitative screening process. So I think it's interesting, the video you showed at the beginning of the presentation, because that was John Templeton actually talking about all the different metrics that he looks at. And he said price relative to earnings, but then he went on to list many different metrics. And he always told me that there were over 100 measuring sticks of value. And this is your opportunity as an investor to really express some of your personal preferences when it comes to investing. But there are many metrics, more than the ones listed on the left, that we look at. But these are just some of the few of them. So in the metrics on step 1 above, we're generally comparing the share price or the enterprise value to earnings, cash flows, sales, or book value. And then as an investor, you should take time to develop your own perspectives and metrics. This is, investing is a very individual sport. I always liken investing to tennis, right? In tennis, everyone can hit a forehand. Everyone can hit a backhand, but it really is the mental game of tennis where matches are won and lost. And I think if you watch tennis enough, or if you read the great book, The Inner Game of Tennis, you might agree it is very mental. It's very individual, investing is. And so you have to be very open with yourself, and you have to be very honest with yourself about what type of person you are and where you want to invest, and individualize your process. I would not say that you should look at my process and repeat it exactly, or anybody else's for that matter, including Warren Buffett, who we all love to emulate. You really need to customize it so that it fits with your personality. But the way to engage the screens above are to run them frequently. So if you're going to start with a quantitative process, you really need to do that very frequently, because what you're going to see is the same names appearing over and over again on these screens. And then occasionally you'll see an anomaly pop up. And that's really what we're interested in, something new that is showing up in the screens. Why is it there? Does it belong there? What's going on with this company? Why are we seeing this? The companies that show up over and over again on the screens, that might be an indication that they're a value trap. They might be priced right. They might be there for a reason. So I do encourage you, if you're going to start with that screening process, to do that frequently. And we certainly do. I mean, there's so many different tools you can use. We use Bloomberg and Excel, and these screens are just very automated. So we're looking at them on a daily basis. But there are many tools that you could use to implement a screen yourself. And when you locate a stock that does not appear to fit in or with the rest of the cohort that you're running in the screen, and again, we're focusing usually on the bottom decile of stocks that show up on the screen, that provides a great opportunity to take a closer look, to really dig in. And we tend to use dividend discounted cash flow models or dividend discount models to estimate the value of the company. That is how we're going to estimate intrinsic value. But there are other methods that you could explore too. However, when we find that our estimate of intrinsic value represents a bargain, which we quantify as 50% more, a 50% more than the share price, then we are compelled to really dig in and take a closer look at these companies. And this leads us to the third step, which is fundamental analysis. So after we've run the screens, we've focused on the bottom decile of the screens, we've seen something new, we've seen an anomaly, we've gotten curious, we have pulled that company out. Why is it there? We want to understand why it's there. We move to step 2, where we're trying to estimate an intrinsic value. What is this company really worth? Again, we're generally using a discounted cash flow model or dividend discount model. And because you're making a lot of assumptions when you run those models, and those models are very error prone, even for experts, you want a big margin of safety. So you're looking for a large discount. So again, looking for the stock that has 50% upside to our estimate of intrinsic value. And that process of going in and modeling using a discounted cash flow model will help you understand the business better. What's really driving the business? And then step 3 just is the fundamental analysis, where we compare recent results in cash flow and earnings with the firm's history. We read recent earnings reports and transcripts. We study the firm's balance sheet over time, and we seek to understand the competitive pressures that are currently facing the firm. If a review of these factors are inconsequential or short-term in nature, we believe the stock may be a suitable investment. So again, we're looking for problems that are suitable in nature. And that is really our process. It's a 3-step process that we're running. We believe that there are 3 sources of alpha available to you as an investor in the market. You can have better information, a better process, or better behavior. So I want to take just a moment to take a closer look at these 3 sources of alpha. First, better information. And this is really what the majority of Wall Street analysts, traders, and the financial media are focused on. But you also need to understand who your competition is in this space. So if you think your edge is that you're going to have better information, you should understand that you are competing with multi-billion-dollar institutional investors that most likely have a competitive advantage due to their multi-million-dollar budgets and access to really cutting-edge technology. So let me give you some examples of what we're seeing when it comes to this. Firstly, satellite imagery is being used to track shipping activity. And large funds use satellite imagery to monitor changes in shipping container yards and ports. Funds can then gauge economic activity and predict future demand for certain goods. Satellite imagery is used to monitor crop health. Satellite images can reveal changes in vegetation, which can be used to predict crop yields and inform agricultural investments. Satellite imagery can be used to detect illegal activity. So funds are using satellite imagery to identify deforestation or illegal mining operations, which can negatively impact investments. Funds are using traffic data. So they're analyzing traffic patterns from GPS data, which can reveal changes in consumer behavior and economic activity in specific regions. They're looking at weather data. They're getting smart meter data, analyzing energy consumption data from smart meters that can provide insights into the health of a specific business or industry. I mean, literally looking at data that will show you who's got their lights on. So, funds are scraping websites for data. So all of that's very common when you're dealing with multi-billion-dollar funds, and those are your competitors. So all of Wall Street tends to be focused on better information. And the odds that you're going to personally have better information than some of these competitors, I think, are probably very low. I don't know. I can't even see all of you. Certainly don't know you individually. Maybe you do have the edge when it comes to better information, but this is an extremely competitive space. And most of Wall Street has focused their attention here. The other source of alpha is a better process. And when I talk about process, I'm really talking about the quant funds out there, the algorithms. And, in this space, you've got top PhDs from MIT competing to build a better model. And I'm not really confident that I can compete well in this area. So your last source of alpha is better behavior. And better behavior is, it sounds easy, but it's very difficult. But this is where this is where investors like Warren Buffett and John Templeton play in this space. They have better behavior than the crowd. So not better information, not better process. They're just better at controlling themselves and display better behavior. So again, that is, I think, probably the best known example of this comes from Benjamin Graham, who I know if you've taken Caden's masterclass, you'll be familiar with Benjamin Graham, but he was known as the father of value investing. And he best describes Mr. Market in chapter 8 of The Intelligent Investor, but that is a good example of how the market is very erratic and you need better behavior. So that is a source of alpha that we use. This next slide is just kind of a funny slide. It's a funny term too, called Homo economicus. And I use this in a lot of my presentations. I actually learned about Homo economicus in college. And Homo economicus is just it's a term that economists use to describe man as a perfectly rational wealth maximizer. Now, you and I know that humans are not perfectly rational wealth maximizers. We make all sorts of mistakes when it comes to investing. Yet most universities around the world teach investing from this perspective. So whether you're dealing with a capital asset pricing model, you know, any of the theories taught in big universities, they usually rely on the existence of Homo economicus. But humans make irrational and emotional decisions when it comes to investing. And the average person underperforms the market significantly over very long periods of time. And several studies have documented this phenomena, highlighting the importance of a disciplined investment strategy. And that's what I love about value investing, really, is that it's simply a discipline that you can adhere to. And it kind of keeps me honest. If I rely on the process of value investing, it helps me override some of my own irrational behavior. It's a very disciplined process. But to give you an example, over the long term, and that's 30 plus years, the S&P 500 has historically returned approximately 10% annually before inflation. So, I mean, that's what the market gives you. The Dalbar quantitative analysis of investor behavior study shows that for the 30-year period ending in 2022, the average equity fund investor managed a 6.81% annual return. And that's in the equity space, but really Dalbar produces this study, and you can see this across asset classes. So it doesn't matter which asset class you're looking at, investors underperform the market pretty consistently. So it should, you know, it's not surprising to learn that people are not perfectly rational wealth maximizers. We're really hardwired to be terrible investors. So investors tend to be very emotional and engage in panic selling during downturns. And I personally think what's even worse than panic selling during downturns is chasing hot stocks during an upturn due to FOMO, a fear of missing out. I see that as being, it's always remarkable. I think it's really hard as investors not to be envious of somebody that you see that's doing well in the market, that's making money. Market's on a tear, the magnificent seven are on a run, and you're not participating in that. It feels really bad not to be a part of the crowd. You feel really left out. So I think fear of missing out drives a lot of investors to chase hot stocks, and this can be very detrimental to returns. So many investors succumb to fight or flight response rather than behave in a calm and rational manner. Almost all investors trade too much, and many of them are not properly diversified. Investors also often pay too much in fees and expenses. And some of this is from the excessive trading. So if you're trading excessively, you're generating fees and expenses. And some of that's just being not knowledgeable about the industry and keeping an eye on expenses if you're allocating to funds, etc. So behavioral finance is a field that's well worth studying, and it will help you understand some of your natural tendencies and biases that many investors have that negatively impact your returns. And examples of this are loss aversion, overconfidence, confirmation bias, herding, anchoring bias, recency bias, just to name a few. And I always encourage people, go out and get a book on behavioral investing, read about it, just being knowledgeable about these biases that you have as an investor will actually impact your returns, in my opinion. So I think, you can see the behavior in yourself, and you're like, wow, yes, I'm really subject to confirmation bias here, and how can I change my process or look for information that doesn't confirm my bias or read something different. So I think these are really important to pay attention to. So where are we today? I mean, I really want to leave you with information regarding today's market. So currently, the S&P 500 has an estimated PE of 20.5 times versus a historical average of 17.2 times. And U.S. securities currently, right now, with a price to sales ratio over 20 times, there are 373 U.S. securities with a price to sales ratio of over 20 times. I mean, this is really remarkable. A price to sales ratio over 20 times is an outrageous valuation when you think about what that means. I used to have a great quote, and I wish I had actually brought it for this event, but there's a great quote by a CEO talking about what 10 times sales means. And when you think about what does 20 times sales mean for a company, it is the most outrageous valuation, I think. But there are 373 companies in the US trading at price to sales ratios over 20 times. About a year ago, that number was north of 700. So the market has definitely corrected a little bit, but there's still some very high valuations out there. So why does all this matter to you? Well, the US market right now offers a stark contrast, really, of risk and reward, potential trouble and opportunity. So to begin, the US market has never seen such extreme concentration in only a handful of stocks. And I'm talking about the Magnificent Seven. So I'm sure you're all aware of the Magnificent Seven, but to be exact, I'm talking about Tesla, NVIDIA, Amazon, Alphabet, Microsoft, Apple, and Meta. So those are the Magnificent Seven. And those 7 stocks now represent a market capitalization of approximately $12 trillion. By comparison, these 7 US tech stocks now have a market capitalization that is greater than the entire UK, Japan, and Canadian market combined. So looking at the 2023 return in the S&P 500 of 26.3%, 16.2% is owed to the Magnificent Seven. Finally, 1/2 of the S&P 500's market cap is concentrated in its top 36 stocks. So there is a risk right now to passive investors in the S&P 500 as far more concentrated and exposed to company-specific risk than you may realize. So if you're a passive index investor and you're allocated to the S&P 500, that's your strategy. You're really taking on some risk, and I think it's important that you realize that. Many investors are now chasing the Magnificent Seven and the S&P 500 to catch up for lagging performance in 2023, since many expected a recession which has not materialized. Finally, of the S&P 500's 26.3% return, 22.9% is explained by PE expansion and the decline in treasuries, with the small remainder from dividends and little, if any, from EPS growth. If EPS does not accelerate in 2024, volatility may resurface. So this is, I think, just an unusual time in the market, but it's always important to remember as an investor that valuations matter. It matters what you pay for a stock. So a good case study on that is Microsoft. So if you go back and look at Microsoft in 1999, was trading at 21.9 times sales and 61 times earnings. And since 1999, Microsoft really has dominated desktop software. It's successfully entered the video game industry. It's successfully transitioned Office into cloud. It has 1 billion users. And, you know, Microsoft has done everything right. This has been a really great company. But despite the fundamental success, Microsoft shareholders lost money from 1999 to 2016. So if you go in and buy at really high valuations, even if it's a great company that executes well and everything's already priced in, you might have to wait a long time before you make any money. I think our opinion is always that valuations matter. It matters what you pay for an asset. So today, NVIDIA trades at 30.1 times sales and 70.1 times earnings. NVIDIA is an industry leader in the AI field of technology, but even assuming that it can maintain its dominance, should investors at these valuations expect an outcome different than what investors got when they invested in Microsoft in 1999? Probably not. It is rational to expect a similar outcome. So, you know, in closing, what I want to leave you with is that investing is really an individual sport. You have to find a strategy and a method that works for you. You have to figure out what type of investor you are, how you're going to react when it comes in a downturn, how you're going to react in an upturn if you're not participating in the Magnificent Seven, how that's going to affect you. What are you going to do in those circumstances? And I think you have to be very honest with yourself and create an investment program that works for you. For some investors, that is passive investing and investing in an index fund. Dollar cost averaging is a great strategy. For some investors, that's going to be allocating to active managers and then letting them make great decisions on their behalf. And if you choose that path, and I'm an active manager, I'll just give you a bit of warning. When you're choosing an active manager, do realize that you're in partnership with that manager. That even if a manager has a long track record and produces an above average return, that even you might have poor results if you are investing with the manager after a big run up, taking away capital when the market falls. You can end up with a bad result. So just remember that. But there are many ways to implement value investing. Again, you can be a passive investor, you can invest actively, you can get in there and analyze these companies, do the DCFs, allocate to individual stocks. You can hire managers that do it for you. But the most important part of the whole process is you and controlling your own emotions, doing what makes you comfortable. So I think my advice to you today is to take an honest assessment of yourself as an investor. Take a look at the market. I've given you some data on the market, where we are versus a historical average for the S&P 500. We have an elevated number of companies trading at a price to sales ratio of over 20 times, which is a crazy valuation. I've given you a case study of Microsoft, a company that's done everything right, and that if investors had invested in 1999 at their high valuation levels, they would have had to wait 16 years before they made any money in the stock. So it's something really to think about when you're looking at today's market, when you're looking at the Magnificent Seven. I think that you need to remember valuations always matter. It matters what you pay for an asset. And that is my advice to you today. And I think we're about right on time. So I will close the presentation. I will close the presentation with my favorite. Well, it's not changing. Let's see. I'll close the presentation with one of my favorite pictures of John Templeton. And this is a picture of him reading the newspaper at the North Pole. And I've used this picture over and over again in presentations. He looks really happy in this picture, so it just gives me a lot of joy to look at it. He did love to travel the world and experience different cultures, people. But B, one time I asked him about managing money in the Bahamas. And he said that his track record had actually improved when he moved to the Bahamas to manage capital. And I asked him why he thought that was. And he said, I think it's because I get the Wall Street Journal a few days later than everybody else. So here he is at the North Pole. I'm going to assume this is not today's Wall Street Journal that he's reading. It's probably a few days late. He was not very reactive. He wasn't reacting to the financial news, the financial media, but just reading the Wall Street Journal for information, which is what we should all be doing, not reacting, not chasing hot stocks, not panicking at the bottom of the market. And so I hope you've enjoyed this presentation today, and I will turn it over to Caden for questions at this point.
Okay, I'll just need my colleague to just... Thank you, Lauren. Thanks so much. Finally, after 6 years, I could listen to your speech one more time. So let me just put up this screen over here. Of all the slides, in fact, this is one of my favorite slides. Better information, better process. And my biggest takeaway is really better behavior. Yeah, it's easier to say, but to do it requires a lot of wisdom across the years, especially experience. So maybe there's one question I just want to ask on behalf of the audience is, if there is one advice you will give to those who are new to stock investing, because to people who are very new to this, it can be a very scary pursuit. So what advice would you give them?
Well, just to jump in. So that is my advice. My advice is to start investing with real capital. I think you have to experience that yourself with real money. And it doesn't have to be a lot of money. Start with a small amount of capital and really, really try to assess what type of investor you are and think about how you will actually react in certain market events. Not how you aspire to act, but how you actually will act. And so, even in our company, we have investors that will say, I don't sleep well at night if I'm doing this. Well, if you know that about yourself and that you're going to struggle with that, then don't do that. There are different ways to invest in the market, and you really do have to find what works for you. So start with a small amount of capital. invest in a stock or a fund or an index and follow that investment. Start paying very close attention to your own behavior. When the market goes up or down, how do you react? Can you improve that? Can you improve your reaction? If not, take that into account and adjust your methodology. I mean, I think it really is a really personal thing when it comes to investing. Again, I liken this to playing tennis. All of the great tennis players are awesome on the court, and these matches are really won in the mental side. And that's what the great investors do. It's the mental game that wins. So, most academics can run a DCF. They can perform fundamental analysis. I'm sure you're learning all of those tools. A lot of people in the world can do that, but you're going to win the tennis match with your mental game. You're going to outperform your peers when it comes to investing with your mental game. So you have to understand yourself, how you'll react in certain events, and adjust your strategy so that you can have better behavior than the crowd. And the best way to start doing it is to start with real money, even if it's just a little bit, and put it in the market, follow the investment closely, do your own research, and see how you react, and start adjusting based on that.
Thank you so much, Lauren. By the way, before Lauren depart from our investify symposium, just to let you know that Lauren has an amazing podcast website, which is at youtube.com/@LC-Templeton-Investing. And if you notice on the left side of the screen, I've intentionally left a QR code. If you really want to learn the Templeton way of investing, can you please take out your mobile phone right now? Can you do a quick scan? Once you scan, a message will pop out, and then you just need to click subscribe so that whenever she uploads any of her podcasts, you'll be able to follow her. And one of my favorite podcasts is actually episode 14, where she was chit-chatting with Dr. George Athanasakos, because he was my professor at the Ivy Business School. So I really enjoy. I think I'm almost done with every episode. Yeah. So I'm really glad that she's doing this for investors. Yeah. So let me see. We maybe have Laura. Is it okay? We just take one more question from the audience. Yeah.
Sure.
Okay. So let me just. I was just looking at the queue. Let me see. Okay, there is one question from Kit Wong, and she asks, as a fund manager, is your strategy different because the amount of money you are tending? I suppose he meant managing, right? You are tending and is different from retail investors. So what are the qualities of a successful manager? So I think there are two questions.
Well, a bit, right? So we pay attention to liquidity when it comes to a stock. And honestly, a retail investor is at a greater advantage, right? Because you guys can move in and out of stocks very easily. So that's a huge advantage for retail investors. And actually, when you take a look at the current market, when you look at where is their maximum pessimism in the market right now, we talked earlier about the large cap stocks being concentrated in the S&P 500 and having higher valuations. Really, it's apparent that small caps in the U.S. are the most heavily discounted versus large cap names. It's the biggest discount we've seen in 25 years. And we think the opportunities in the small cap space. And a lot of really large fund managers can't play in that space. So it's a really good opportunity for investors to take a look at U.S. small caps. So when you compare the Russell 2000 on a price to book value ratio with the S&P 500, it now trades at 0.4 of the S&P 500, or approximately a 60% discount to the S&P 500. And size matters. I mean, these big guys just can't play in the small cap space. So it's a large advantage for smaller managers and retail investors. Also, many stocks in the small cap space don't have analyst coverage. So if you're willing to roll up your sleeves and do the work, you've got a big discount there, a 60% discount to the S&P 500. It could be a great opportunity for smaller investors. Now, I'm going to say all of that. There are some legitimate reasons that U.S. small cap stocks have traded at a wide discount, but we believe the relationship has become just way too exaggerated. And then I think your second part of your question was, what are some of the characteristics of a good investor? Patience, discipline. So, I mean, I think most great investors would say patience. I agree with that. Discipline, discipline, discipline. So it's so hard to override some of these behavioral biases and your emotions, that the more disciplined you can be in your investment process, the easier that is going to be to implement. So I think those are the two things. Are you a disciplined person? Can you be patient? Can you have delayed gratification? These are all great qualities when it comes to investing. But I would not, even though some of the larger guys, I know in my presentation, I told you about some of the neat things they're doing to get an edge when it comes to better information. I mean, the smaller guys and the more nimble you are, I mean, that is a huge advantage. And you're seeing that right now. I mean, that's where, in my opinion, the opportunities are in U.S. small caps. And it's good to be a small player when it comes to that market.
Thank you so much, Lauren. By the way, just to let you know that of course, we mentioned this book a couple of times. Lauren has written Investing the Temperton Way together with her husband, Scott. And in case you want to learn more, you can always grab a copy at Amazon. Okay, so this is how the book look like. Mine is a hardcover, so I really love it. Okay, so thanks, Lauren. Thanks, Lauren. You can see Dr. Todd is already there listening to your presentation. Yeah.
Bye.
So have a good rest and have a great week ahead. I shall catch up with you soon.
Thank you.
Thank you, Lauren. Thank you. Wow. Amazing presentation. Now, I'm not very sure whether you understand the importance of Laura Templeton appearing at our investify symposium, because it's really a rare chance. And like I say, the last time I got to speak to her, it was way back in 2018, physically in Singapore. Yep. So let's jump straight to the next amazing speaker. We have about 2 minutes left before Dr. Todd comes on board. Now, our next amazing speaker is Dr. Todd A. Finkel. Yep, he's the Picker Professor of Entrepreneurship at Gonzaga University, and he has been teaching for more than 34 years at 4 different universities, publishing more than 270 articles, books, presentations, and grants. That's really phenomenal. He's also an expert on Warren Buffett. There should be extra T over here. His recent book titled Warren Buffett, Investor and Entrepreneur is published by Columbia University Press. And of course, this book traces the entrepreneurial path that shaped Buffett's career, from selling gum door to door during his childhood to forming Berkshire Hathaway, which is actually an investment conglomerate, and developing it to a global conglomerate through imaginative deployment of financial instruments as well as creative deal making. Just to let you know that this is the book published by Columbia University Press, and it's written by Dr. Todd. Now, what I love most about this book is it's written in simple languages, especially if you're a layman and then you're trying to learn investing for the very first time. This is really a great book. Yeah, and I'm really happy to have an autographed copy. This is priceless. Yeah, the Dr. Todd's book, which is this copy, also zeroes in on Buffett's longtime business partner, Charlie Munger, who has unfortunately passed away a couple of weeks ago, and his contribution to Berkshire Hathaway's success. So Dr. Finkel draws key lessons from Buffett mistakes, Yep, very important to learn the good things as well as the mistakes, as well as his successes using these failures to explore the ways to handle behavioral biases, can attract investors, and how to overcome them. Yeah, by the way, Dr. Todd is not only an academic professor, but he has been an entrepreneur of 6 ventures and consulted with a wide variety of entities, including countries and universities from all over the world. And Dr. Finkel has been interviewed or appeared in a variety of media, including the Cleveland Plain Dealer, Entrepreneurship Magazine, Forbes Magazine, and so on, Washington Post, and several radio and television stations. So this morning in Singapore time, we are really happy to have Dr. Todd A. Finkel to be on board our investify symposium. And just to let you know that he is speaking in US Pacific time. Yesterday, Robert G. Eller was speaking at Mountain Time. Laura was speaking at Central Time. And Dr. Todd is at Pacific time. Wow, it's very difficult to put 3 different time zones together so that all of us can really appreciate the wisdom of Dr. Todd. So ladies and gentlemen, can we all put our hands together? Welcome Dr. Todd A. Finkel. Yay! Online, we have 570 people. So I'm just going to stop share. Yeah, hi, Dr. Todd. Welcome.
Yeah, hi, Caden. Thanks for having me on.
Yeah, thanks for coming early.
I'm going to share a screen here. Tell me if it's okay.
Okay, looks good. You just need to put into the presentation mode.
Yep. How's that look?
I could see the notes.
You can see the words?
Yeah, I could see the words.
How do I get rid of those?
You do a right click.
Okay.
You do a right click and then you left click hide presenter view. You left click hide presenter view. You see your mouse up? Yeah,
I got it.
Yeah,
I got
okay.
it.
Left click hide presenter view.
So I'm good to go.
Hang on.
Is it good?
Not yet. Okay, let's put into the full PowerPoint mode first. Yeah, left click the slideshow. Yes, left click. Or maybe you want to try closing the presentation and then relaunch it again.
Okay.
It's okay. By the way, while Dr. Todd is launching his PowerPoint presentation, just to let you know that, remember I told you about this book, Warren Buffett, Investor and Entrepreneur. Just to let you know that this entire book has about 200 over pages and it consists of all his hard work and his research. And there's also a huge thick stack of references right at the back so that you know where are the sources of information that he has extracted in order for him to compile his book. Yeah. Okay, the PowerPoint is up. Yes, looks good. Looks great.
So I'm ready to go?
Ready to go.
Okay.
Thank you so much. Make sure that your timer is on, just in case.
Yeah. All right. I'm sorry. Sorry about the wait there. You know, Lauren was great. I hope you could really appreciate it because it's always a special treat to listen to Lauren because she's so smart. So you had a winner there, Caden. Great job.
Thank you. Thank you.
I really thank Caden for having me in. Forgot my microphone, sorry. For having me in. I really like Caden. I've never met him personally, but we have some things that are very much in common. He went through cancer. I think he went through cancer treatment twice, right?
3 times.
Oh man, I didn't realize it was that much. And my wife has been through cancer treatment twice, so he's quite the trooper. I'll tell you. I'd do anything for Caden. And he's written like 4 books and he's given it all away to charity. How many people do that? I don't know anybody that does that. You're the only one.
Well,
So thank you, Caden.
thank you. Thank you, Dr. Todd, for joining us this morning.
So I'm here. I wrote a book on Warren Buffett. It's a national award winner here in the United States. It's been translated into 13 languages. And you're probably wondering, why did I write a book on Warren Buffett? Well, for me, it was a 14-year process. I went 9 years of research, and I got to know him during those 9 years. I took 6 groups of students to go visit him and went out to lunch with him 3 times, and went to 14 shareholder meetings. So I was getting all this different research on Warren Buffett, and I was trying to learn as much as I could about him because I wanted to learn what his secret sauce was. I, how does he, how did he get to be so smart when it comes to investing and making money? And I wanted to learn how he did that because it's not so easy. There's so many factors that you need to look at, and after listening to Lauren's presentation, and it's still not easy. There's a lot of variables that are involved in it, and you're competing against the smartest people in the world. So that's where you need to take a class from Caden, and he can teach you the various aspects of it. But it was a great project, and I'm glad that I did it. And I learned a great deal. I'm a better investor, and I'm also a better person because I focused on that a lot in the book. So here's some a picture of the Buffett family. There on the left is Howie Buffett. He is the family is from Omaha, Nebraska, which is where I was born. And I grew up, and I actually went to the same high school as Howie and Susie and Pete. And I was 2 years younger than Pete, but I also went to junior high with him and senior high school, and I ate lunch with him every day in the cafeteria. And he was just a down-to-earth guy and into kind of the arts and photography and music. And he went on and actually won a Grammy as a musician after high school. And there's another picture of Pete there, but so.
Sorry, Dr. Todd, you may need to shift your slide. Your slide has not transitioned. Maybe you do a left click and the slide will move. Right now, what I'm seeing is the cover slide.
Oh, you can't see the next slide?
No, we're not seeing. We're only seeing the cover slide with Warren Buffett's picture.
You're just seeing that?
It's still the same cover slide. Maybe you want to exit from the presentation mode and then you put it on again.
Hold on a sec.
No worries. You went now. Yeah. Yep. So, ladies and gentlemen, please be patient with Dr. Todd. I mean, it's really a rare treat that he's here with us. And somehow we did a trial test a couple of days ago. Everything went fine, right? So, like life, right? A stock market sometimes unpredictable in the short term. Yeah.
Screen.
Yeah.
Green one is that one.
Yeah.
Okay, so click on there. That should be it.
Yeah. It's full mode. Yeah. Is it okay? Just transition to the next slide to see if it's working.
It's not working. It's not coming through. Is he saying?
Oh, he's saying it's not coming through. Oh, I see.
What am I doing wrong?
Stop share.
No, I cannot hear you. Speak louder.
I don't know. The only other thing you could do is leave the meeting and come back in. What do you have? Close this. Close that.
Close this?
Yeah. Okay, now open it up again, but make sure, is it over there? Look over there. I mean, again, close that if you can, yeah. And just open up your PowerPoint on your screen.
There. There.
Okay, and then slide it over. Okay, now screen share. And screen one, try again. It says participants can now see your screen, but what was that thing that just came up?
Mozilla crashed.
Oh, okay.
Dr. Todd, I could help by sharing your slides at my end if you find that that's easier for you.
Yeah, well, let's do that because it's not working on my end.
Okay, so let me just pull up your slides. Fortunately, we do have a backup plan. Let me just pull this
Yeah,
up. No
that's good.
worries, no worries. Technology. Let me just share your slide. Okay, and I'm going to put it to full mode. Just ask my colleague, right, to see is everything okay? Okay, all good. Dr. Todd, the audience will be able to see the slide right now. You just let me know when to transition. I'll just click for you.
Bigger?
Can you make it bigger, Caden?
Make it bigger.
It's just
Hey, son?
Oh, there. All right. All right.
Okay. Got it. Thank you. No worries.
Okay.
No worries.
Let's move on. So go to, that's the family that I talked about there. Howie's on the left and Peter's on the right. Next slide. And there's Peter again. And again, I'm from Omaha and I grew up with the Buffett family. And the thing that's different about me writing this book is that I knew the family before they were wealthy and famous. And that Warren told me that, and he liked that. Next. And there's Warren eating a root beer float. And it was out of the 6 visits that I took to go visit him with my students. This was one of our visits. And I was sitting right across from him during this. And I had an opportunity to ask him any question that I could, and really the only one that I thought that I wanted to learn about was how he values a company. And all he really told me was the discounted cash flow. So I was kind of disappointed in that, and that even gave me more of a reason to investigate, how do you value a company? Next. And here's the group of our last students that went to go visit Warren Buffett. Next. And my book has 13 different chapters. And let me just briefly review the chapters with you. The first two chapters focus more so on his background in entrepreneurship. So I've been an entrepreneurship professor for 34 years. So I wanted to definitely integrate entrepreneurship throughout the whole book. And by doing that, that allows you to learn about entrepreneurship and how to become an entrepreneur and maybe even how to become an entrepreneur like Warren Buffett did. And chapter 2 focuses on Dale Carnegie, which had a big influence on Warren Buffett and his Buffett's education and his partnership years. Chapter 3 focuses on the late Charlie Munger, who just passed away at 99 years old, and which was too bad. That's a great chapter. I had 2 chapters written on Charlie Munger, but the publisher told me not to do 2 chapters, but just to integrate both of them together into one. Chapters 4 through 6 are about the secret sauce, Buffett's secret sauce. And again, that's really what drove me to write a book on Warren Buffett was, what exactly does he do? And so I've read all these other Buffett books, but nobody ever gave me an example of exactly what Warren Buffett does. So the thing that I love about my book and that will be really beneficial, I think, to you, all the people out there, is that I take you through step by step on the metrics, the financial metrics, and how to use them and how to calculate them, and then how to calculate a discounted cash flow and all the various variables. So this is very sophisticated stuff, and that's why you need to have a margin of safety because you can easily be off by quite a bit. So it's great stuff. And I use a real world example, Apple Inc. So behavioral biases, I think, is probably the most valuable chapter in the book. And I go through the history of behavioral biases. And I talk about Charlie Munger and behavioral biases. And I give you 7 different examples of behavioral biases. I define them. I give you an example of behavioral biases. And then I tell you how to overcome them in the book. Oh, next. 8 and 9 are the growth of Berkshire Hathaway. 10 is Buffett's 21 investing mistakes. 11 are his value shareholder meetings that I've been to, philanthropy and happiness. And 12 is our trips to go visit Warren Buffett. And then 13 is kind of the future with fintech, digital currencies, and succession. Next. And those are all the areas there that differentiate my book from other Buffett books. And next. So one of the things that I did for the book is I interviewed Susie Buffett, which is the only daughter of Warren Buffett, and I asked her, how does Warren Buffett really, what don't we know about Warren Buffett that you know? And she said that he really cares about social justice and women's rights and civil rights, and that people don't understand that he's more than just this rich guy, but he cares about people. And then I went on and I talked to her about, do you realize that Warren's an entrepreneur? And she started to laugh, and she didn't even realize that he was an entrepreneur. So we both kind of laughed about that. And growing up, the family always would have somebody from a disadvantaged background at their dinner table. And so that was something that was related to Susie, the wife of Warren, and she cared about the community, and she wanted to know what was going on in the community and how she could help them. All three of Warren's children do not have a college degree. And there on the bottom there, it says Bono, he's the lead singer of U2. So he comes to Omaha, I don't know, several times a year, and he always stays with Susie and her husband, and Susie's husband is a musician as well. But Susie controls, I don't know, about $6-7 billion in foundation money, and Bono, is really into helping out people. So he comes into Omaha and probably has some proposal for her to do volunteer work. Next, please. The biggest surprise in the book for me was Warren was born in August of 1930. And this is the Great Depression. Him and Charlie Munger grew up in the Great Depression. And Warren's father lost his job and all the money that the family had. And then his mother started to have mental health issues within the family. So it was complete chaos in the family. And she was telling the kids how worthless they were. And I think that just had a significant effect on Warren for the rest of his life. And I think he has what's called the poverty effect. The poverty effect. So next, please. This is a great slide in the sense that we're talking about entrepreneurship and success in business. So in entrepreneurship, there are 60 different definitions of entrepreneurship. All right. So everybody tends to think of entrepreneurship as just starting a company. And it's not. It's really a mindset. It's the way that you approach things from an opportunistic perspective. So business experience versus education. This is when we were visiting Warren at one of his talks, and he was looking right at me when he said this. He said, the most successful business people that he's met in his life are ones that don't have these Ivy League degrees, but they're the ones that have the most business experience, that think way outside of the box. I share that with my students at least 2 to 3 times a semester. Next. So this is an example of Warren Buffett's entrepreneurial background, and it starts at age 4 when he started selling lemonade on his neighbor's driveway, and then he got into gum and selling Coke door to door during the Depression. He just did all these different entrepreneurial things from such a young age. And he knew a lot about a lot of different industries ever since he was a young kid. On that slide, the most interesting thing is that he read all the books in the Omaha Public Library on the stock market twice by the time he was 11. So let's move to the next slide. We'll look at some more entrepreneurial things Warren did. He bought his first stock in city services at age 11. It went down, and then it went back up, and then he sold it, and then it went back up way up to 200, and he realized that he made a huge mistake. So that was his first big lesson that he learned about investing. Think long term. His father became a U.S. congressman, and they moved to Washington, D.C., and he continued his entrepreneurial ventures, and he bought a farm when he was 15 years old. He had a pinball company with 7 machines, and he bought a used Rolls Royce and was renting that out while he was a senior in high school at 16. He graduated from high school at 16, and he was 16th in his class, and he made $76,000 by the time high school was over. And he did not want to go to college, by the way. His father forced him to go to college. He thought that he could get more knowledge from running businesses than he could from going to college. That's going back to why his kids didn't end up getting a degree. He didn't think much of higher education. As a matter of fact, he has said several times that you only need to take 2 classes to become a successful investor. And one of them is how to value a company, and the other is on behavioral biases. You know, how do people behave in financial markets? I love this slide. The previous slide is Warren Buffett realized at age 10 that he wanted to be an entrepreneur. He realized how powerful money was, and probably because he grew up in the Depression, that he wanted to be independent and that he wanted to be an entrepreneur, and that by having money, that would allow him the ability to be an entrepreneur and to work for himself. Okay. So I'm skipping the education, the higher education part here, and I'm moving forward. Warren, after college, he ended up working on Wall Street for a couple of years under Benjamin Graham at Graham Newman Partnership. It's a hedge fund, and he became a millionaire after 2 years of working on Wall Street. And then Graham ended up liquidating his version of it. He didn't want to have any more. He made plenty of money and he retired. And Warren moved back to Omaha, and he started partnerships in Omaha. He really wanted to retire, but his family didn't let him retire. They said that they wanted him to manage their money because he was so smart. And people actually came from all over the country to give Warren Buffett money during these years, 56 to 69. And he made 25 million and 100 million for his partners during this period of time. And there are share letters out there from the partnership years that are great. You can find them online for free. Next, please. So what are some keys to Warren and Charlie's success? That first one that's up there is my favorite, is stay away from toxic people and stay away from toxic situations. I think about that all the time. Think about that and try and get rid of that from your life, and your life will be much better off. Warren and Charlie are both, Charlie was both rational. They stay within their circle of competence. They don't go outside of it. They're both, well, Charlie's not humble. I wasn't humble, but Warren is very humble. And what makes him unique is that he has an extremely high IQ and EQ. And that's very, very rare. And he has the ability. I remember the first time that I met him, and I shook his hand, and he was looking right into my eyes, and he has the ability to size people up pretty quick. So trust is really, really important with Warren Buffett. And I'm going to tell you just a brief story there because we're running a little late. So when I met him, when we went out to lunch that time, he was telling me that he had a friend in Omaha that was over during World War II in Europe, and that he was being hidden by a family, and somebody turned him into the Nazis, and he was in a concentration camp. And he lived through the concentration camp and eventually became friends with Warren Buffett. So when Warren Buffett thinks of when he meets you for the first time, he's thinking, will this guy turn me into the Nazis? Another thing that makes him successful is that when he looks at businesses as businesses, and not as a stock analyst, but as a business analyst. Here's some companies that Berkshire Hathaway has a piece of Berkshire Hathaway is half private companies. There's like 62, and the other half are investments in stocks. Next. And here are the returns of Berkshire Hathaway since the 1960s. Really, all you had to do is just put your money in Berkshire Hathaway every year or every month or whatever, and go play golf every day with Caden. Next. So Benjamin Graham was Warren Buffett's idol. He taught Warren Buffett at Columbia University. Benjamin Graham said that Warren Buffett was the best student he's ever taught. He gave him an A plus, the only A plus he's ever given out in his life, and he wrote two of the most important investment books that are out there. Next. So Benjamin Graham was more into numbers and financials and things like that. But Warren also was really into Phil Fisher. And Phil Fisher, and he wrote a really famous book too, Common Stocks and Uncommon Profits, was into the totality of a company. And let's look at the next slide and I'll talk about that. So Phil Fisher was into all these different things. So he was like the guy that came up with the scuttlebutt methodology. So the scuttlebutt methodology is kind of when you're out there and you're observing what's going on. Peter Lynch was into this too, and he was investing in things, and he'd go to the shopping mall and he'd see what everybody's buying and things like that. But I have an example with Berkshire Hathaway with the scuttlebutt methodology, several. I'm just going to give you one, is with See's Candy. So Berkshire owned See's Candy. They bought it in 1972. And it's one of my favorite stories. And I love See's Candies too, by the way. But they learned about that opportunity when a guy that was working for Charlie Munger was on a boat on vacation over in Europe. And this guy was talking about how he needed money and he was in debt. His brother just died and he needed, to pay off some debts. And it was the son of Mrs. C. Candies. She died, and then she left it to her two kids. And then the kid that was doing all the work died. And now the guy that wasn't doing the work needed to pay off the debts. And that's how they initially found out about See's Candies. And that's been one of their best purchases ever. And they always say that at the shareholders meeting. They've made billions on See's Candy. Phil Fisher introduced him to long-term investing, focusing on moats. There's a whole bunch of material on moats that we don't have time to go through. But strong management teams with integrity, innovative products and services, solid financials, a margin of safety like we talked about earlier. And he says you don't need a lot of stocks, maybe 10 or 20. And Warren really, I think about 75% of his portfolio, his stock portfolio, is only in 4 stocks. Okay, Caden. So behavioral biases, I know we were talking about that a little bit earlier. Those are some of the biases that are in my book. Let's go to the next slide. And Charlie Munger was really big into biases, even before there was a field of behavioral bias. He was talking about it in a lecture called The Psychology of Human Misjudgment, which is pretty famous now. And I recommend that all of you get a hold of that. And my favorite one, he has like 25 different behavioral biases he talks about in that speech. My favorite one is that people are very envious. It's not greed that causes the problem in the world. He talks about envy, that we're very envious of other people. We're envious of our neighbor who gets a brand new car, and we want a brand new car. So But read that, definitely. Put that on your list. Next, please. So let's go through just a couple different behavioral biases. The biggest one, I think, at least for me, is what's called loss aversion bias or prospect theory. And this was created through two guys, Daniel Kahneman and Amos Tversky. Now, Kahneman is a Nobel Prize winner in economics, and they did this experiment where people feel twice as painful when they lose money as when they gain money. So this is a problem in investing, because if you're feeling twice as much pain from losing money, you're not going to be investing as much in stocks, which give you the best return over the long term. So what they say for you to do is to have two different funds, have a more risky fund, maybe with more stock in it and less bonds, and maybe have a conservative fund that's maybe 50-50 or less. And that's all dependent on your risk tolerance and how old you are as well. Next, please. Herding bias is another bias, and Buffett was guilty of this as well. He bought Conoco in 2008 when it was at its high. Why Buffett would see, he's guilty of doing these as well, so don't feel, let me tell you, it's okay for you to make mistakes. You're going to make mistakes. Don't get down on yourself too much when you make mistakes. Otherwise, you're going to be miserable. And talking heads bias, I'm guilty of this myself. Buffett always says you can't predict what's going to happen in one day, 1 week, or 1 year. So what do all these TV stations and talking heads do every day? They try to predict what's going on. And we're listening to it. And we're watching all these shows, Fast Money and Kramer on TV, and all just, you have to put things into perspective. And, there's all these magazines as well. And Buffett says for every 100 years, you're going to have 15 bad years. Also, just because that you're getting advice from somebody, you really have to think about, why are they giving you this advice? Are they trustworthy? And what's their motive? What's the motive of the person? Thank you. Let's move on. Recency bias is, something Buffett's guilty of again. For years, I've been to the shareholder meeting. He would just every year he'd laugh about how much he hated airlines. He's an airaholic, on and on about how he hates them. Then he buys airlines in 2016 to 2020, and the pandemic hits, and he sells them all, and he lost $5 billion. So again, nobody's perfect. Even Warren Buffett is making mistakes. Next, please. Buffett's biggest mistake that he made was the purchase of Berkshire Hathaway when he was in the partnership years. He owned 7% of Berkshire Hathaway, which was a textile company in the Boston, Massachusetts area. And he wanted to dump it. He wanted to sell it back to the company, and the CEO said that he would give him orally $11.50 for his shares. And then when the letter came from the CEO, it said 11.375. This made Buffett furious. He couldn't believe that he was getting ripped off by the CEO. And so what he did was he bought the company and he fired the CEO. And that was the biggest mistake of his investment career. And he admits to that because he lost 300 to 400 billion in today's dollars. And Charlie said the reason why he did that was because his father died 5 days before that. So you have to be careful in your decision making. My suggestion would be make sure that you have somebody else that you flow that through to make sure that it makes sense. He didn't do that with Charlie. Okay, next. The Dexter Shoe Company is another huge mistake. He bought that was located here in the United States as well, for 434 million in Berkshire Hathaway stock. It closed in 2001. Why? Because of all the competition, especially in Italy. Italy became really big into shoes, and so he ended up losing in 12 billion as of 2019, which, what is that, 20 billion probably today. Again, that would be called recency bias. Just because they've done well in the past doesn't necessarily mean that they're going to continue to do well. Okay, next. And mistakes of omission are probably Buffett's biggest mistakes. He had an opportunity to buy in on the IPO of Intel. Can you imagine how much money Buffett would have made if he got in on the IPO of Intel? He had an opportunity to go in on the IPO of Google. He had an opportunity to invest with Microsoft in the 1980s. And Microsoft is still, gold. And what's funny is that he always says that Amazon is the best company and all this stuff, and then he finally bought it in 2019, probably from his co-CIOs that he has. Okay, next. Here, that's Buffett's investment process. Let's skip that. I'm going to talk about that. Let's skip that. Buffett's investing style, because I'm limited on time. He wants a margin of safety, buying less than the intrinsic value, hold for the long term, and let it compound. I already said you only need 2 courses to be a successful investor, so make sure you take cadence classes. And intrinsic value of a company is part art and part science. It's extremely difficult. Try and learn as much as you can and ask questions. And qualitative and quantitative factors, and let's look at a few of those. So qualitative, maintain your circle of competence. And you want to make sure that, I was thinking about this today. I was thinking, well, why not get into AI? It's got great long-term potential. So, it might not be a bad idea to look at that as a potential circle of competence for you, but you'd have to do a lot of research. The management team, are they talented? Do they have integrity? Are they passionate? Do they own stock in the company? Are they thinking for themselves, or are they lemmings? Doing research on the industry, the competitors, the business models, the brands. Buffett in his younger years, and he probably still does this, will call up all the major competitors of a firm he's thinking of investing in and ask them who they would invest in within the industry. And moats, like a cost there's like 5 different moats. I'll give you a couple. Cost for like Geico or Costco, brand, Coke, and Gillette and Apple. Let's move on. And quantitative. I got a couple slides on quantitative things to look at. He looks for good economics, a firm that's not competing on price. He wants to see an ROE somewhere between 15 and 20%. And he wants to see the debt to equity ratio paid off within 5 years. He wants to see profit margins of around 20%. He wants strong free cash flow and consistent. And he'll look at that usually over a 10-year period, by the way. Next. He wants firms that don't want a lot of money, that are not capital intensive. Of course, that's not always true, because he did buy Burlington Northern Santa Fe Railroad. So I don't, for certain companies, that's not true. He wants firms that have a good return on net tangible capital of 20%. He wants firms that have the ability to raise their prices during inflation, and sees he can do that and see at See's they raise their prices 10% a year, and it doesn't affect their sales because it's such a good product. And what do they do with their retained earnings? Do they buy back stock, or do they give dividends? And those are some of the secrets to his success over the years. Or like Coke gives out a dividend, what is it, around 4% a year, and Apple gives out big dividends and buybacks, and the valuation, he has to have a margin of safety. So is the margin of safety 10%? Is it 25%? Is it 50%? I don't think anybody knows, and it depends on the company, and it depends on how well they've done in the past. I know I wrote a case study, and he read it, and I put down 25%, and he didn't say anything negative to me about it. So. And I went to the last shareholder meeting, and I was selling my book by the bookstore outside of a book signing, and a guy comes up to me from Australia, and he goes, "Buffett will not do a deal unless he gets 15% return on the day of the deal," and he walked away. So I don't know how true that is, but I just thought I'd put that in there. Okay, next. Some additional thoughts are 99% of Buffett's net worth came after 50. He does tons of research, 10Ks, 10Qs, annual reports. He likes high demand products like Coke and Geico, and there's no magic formula for putting a value on a company. He'll buy back his own stock if it's less than 1.2 times book value. And again, he has a concentrated stock portfolio. Next, I'm almost done. So one of the most famous people that he was also on Berkshire Hathaway's board of directors is a guy named Tom Murphy. Tom Murphy gave Buffett some great lessons, and his lessons were decentralize and hire great people and leave them alone, and buy quality businesses and be very frugal. So let me briefly go through this decentralization stuff. Is Buffett is an entrepreneur, and entrepreneurs hate to manage people, and they hate to fire people. And Buffett is all those. So what does he do? He has 26 people at his corporate headquarters in Omaha, Nebraska, and he has all these 62 companies that own more companies, and he outsources everything. He decentralizes everything, but that relies a lot on trust. You have to really trust the managers that are involved. But by leaving these managers alone and letting them do their own thing, they can do creative and innovative things. That's one of the keys to managing entrepreneurs. Is entrepreneurs don't like to be managed. Okay, next. Two more slides. I'm almost done here. So some personal lessons learned. I think the book is good, because you learn about money and behavioral finances and how to value a company and all that other stuff. But I think what's even more important is how to live a better life and the things that you can do to be a better person. And so let's look at a couple things that I learned from Warren Buffett and some of my own personal opinions as well. One of the first things that he always told us every time we went in there is the most important decision that you're going to make in your life is who you marry. And number two there is I will speak no ill of any man and speak all good of everybody. So that's another one of my favorites is that if you're in a group and you have one person there and they are saying negative things about other people and they're going to be saying negative things about you when you walk away. So I try to stay away from people like that. And I try not to say anything negative about people as well. And if there's one thing I've learned from Warren Buffett is that I have never heard him say anything negative about anybody. And I listen to everything he says. Buffett measures success by how many people love him. He says that if you think that 2x instead of x will make you happier, you're probably wrong. Now, that depends on how much money you have, too. Next. Do what you love. Work for somebody that you admire the most. Invest in continuous learning. Try to learn something new every day. Warren in his heyday was reading 500 pages a day. Invest in self-improvement. I put down communication skills, but in chapter 2 of the book, Dale Carnegie, there's probably 50 things on there related to self-improvement that can help you. And hang around with people that are better than you, meaning that hopefully, you'll float in that direction of those people, and they'll want you to be successful. I say to my students every semester, you want to be around people that love you, care about you, that want you to be successful. Okay. And this is just a slide on the various investment books. I just put that up there just in case you're interested in those. And I'll be happy to, or you guys can just take a picture of them, I guess. But those are all what I think are the most significant investment books that are out there. And I've read them all. One of the best things, I think, is just to read Berkshire Hathaway shareholder letters. You can buy those through a book, or you can they're all online. You can find all this stuff online. And one last slide is where you can reach me at if you have any questions. My website, my Gonzaga website, LinkedIn, X, Instagram, Facebook. And thank you for having me. Again, I want to thank Caden for having me come on to talk to you today. I apologize for the mix-up in the beginning, but it appears to have worked out okay.
Thank you so much, Dr. Todd. Actually, I have one personal question for you. Just give me a second. Yeah. In this symposium's audience, we have about 581 people watching, and probably 50% of the audience are very new to investing, especially investing in stocks. If there is one most important advice that you will give to new investors with small capital, such as $5,000 US, what do you think they should do with this $5,000 US?
Well, I would try to learn as much as possible, and I'd probably start out. I was watching some of looking at some of the material that you have in your academy, and I was thinking, God, that's great. I should take your class. So I would probably see what's available with Caden and maybe take one of his classes, and then get some recommendations and read some stuff on the side as well. If you're just starting out, just read as much as you can on investments. My degree, just to give you an idea to help you, my undergraduate degree was in biochemistry. Biochemistry, okay? I've never taken an investment class in my life. I just learned through reading and hanging around with people. My best friends are all former professors, and they taught investments. So, hang around the right people, like Warren Buffett says, and you'll go in that direction. Read as much as you can in investment books. And I would start investing too. I think Lauren said it best. Again, Lauren did a great job today. Start investing and keep track of everything that you do. I still do that. Keep track of everything that you do and figure out where you make mistakes. The biggest mistake you're going to make, I can tell you this already, is when it it's about behavioral biases. That's definitely something that I'd start reading before you even invest, and learn about what behavioral biases are, on how you can overcome them and recognize which ones you have, because we all have them. I love that chapter in my book on behavioral biases. Man, I use that all the time. I have saved myself so much money by writing that chapter. And that was the last chapter that I wrote. And I didn't want to write that chapter, but I have a friend who's a CFA. He goes, Todd, you need to write a chapter on behavioral biases. I go, but I spent 5 years writing this book, and now you're telling me I need to write another chapter. And but I am so glad that I wrote that chapter. It just opened a whole new world for me, because I'm not that sure. When I added that chapter and I looked at all the other Buffett books, there really wasn't that much in there about behavioral biases. I mean, even Robert Hagstrom, who's got like one of the most famous books on Warren Buffett, didn't really have that much in there.
Yeah. Thank you so much, Dr. Todd. By the way, just to let you know that Dr. Todd's book is available at Amazon. And let me put this slide up, and I just need my colleague to post the link. Now, all of you should be able to see a link, which if you click on it, it goes directly to Amazon, and you can always get a hard copy of Dr. Todd's latest book called Warren Buffett, Investor and Entrepreneur. Like I say, it's one of the best books to me, right, ever written. And one of the key things I like is because it's written in simple English. And if anybody want to kickstart your journey to invest, I think it's always important to read like what Dr. Todd is saying. Yeah. So thank you, Dr.
I think it's a great book for people that are starting out for investing. It doesn't have all these really fancy formulas, and that will confuse you with symbols that you don't understand. It's easy to read. Again, my degree was in biochemistry, so I'm speaking to the people that don't really understand how to do this stuff.
So Dr. Todd, I just realized that your degree is pretty similar to mine, because my first degree was in biology. I know nothing about finance. So both of us managed to sort things out along the years.
Yeah, we went in the right direction. It's much more fun being in investments.
Yes, correct. Absolutely true. So, yeah. Sorry, Dr. Todd. Yeah.
No, I'm fine. I'll let you go.
Okay, thank you, Dr. Todd. Thanks for joining us this morning in Singapore time. And again, I would like to thank you again for appearing on our investify symposium. I wish you and your wife a good health, and I hope to see you soon in another event. Thank you so much. Thank you so much, Dr. Todd. Thank you. Wow. Finally, two of our keynote speakers have spoken. So again, I'm at this slide, which is the Amazon website showcasing Dr. Todd's book, which is an investor and entrepreneur, Dr. Todd A. Finkel. By the way, even if you buy the book, I will not have any form of financial incentive. And I said that I really like it because I really like the book. I've read many books, especially those technical ones on investing, but this is really written in simple English. Yeah, for non-finance like me, at least like what Dr. Todd was saying, his background is in biochemistry. Interestingly, I didn't know until just a moment ago. Yeah, so really you have to get this book. The link is in the chat right now. If you click on it, let me see what's the price, right? I think the price is, it's 37.08 Sing dollars. $37 is, in the current way, is nothing much. It's very little. So I think this is a good investment. And Dr. Todd was really nice to recommend my classes and so on. That wasn't really staged, right? I didn't tell him to say what he wanted to say, but he was really nice to share what we do. So let me just stop share for a short while. Let me pull out the relevant screen, right? And then I'll close Dr. Todd's slide. Just give me a second. I'm maneuvering a few things at one time. Let me see. Okay. So maybe I will, in the next 1 minute, I'll just share one of the classes that Dr. Todd has mentioned. I just need my colleague to be ready. Let me just share this screen. Now, just in case some of you have never invested before, in a sense that you never owned any shares of any public listed company, just to let you know that it's not as simple as watching a YouTube video. And even by listening to Lauren Templeton and as well as Dr. Todd Effinker, it doesn't mean that you become a genius the very next day. So just to let you know that we are running physical classes, on-site classes, which are totally complimentary, right? And it's going to take place on the 31st of January, Wednesday. And because it's on-site classes, which means that you have to be residing in Singapore. And on the 6th of February, Tuesday, 7 p.m. to 10 p.m. So it's an evening class. Yeah. So the two links are already posted in the chat. Yep. So if you really want to kickstart your journey to see whether it's investing suitable for you, just click on any of the link over there. You can register the classes since you don't have to really put in any money, right? So there's absolutely no risk. And upon appearing on site, which is our training studio, at the registration counter, we'll pass you 2 documents for you to kickstart on how to invest in ETFs, such as the STI ETF, as well as the S&P 500 index fund, which is highly recommended by Warren Buffett. And then for the 3 hours class, you learn how to generate 3 sources of passive income, even if you know nothing about investing, the value investing way, the Templeton way, as well as the Warren Buffett way. You kickstart with just a minimal capital of 100 Sing dollars per month. Yeah, so that's the minimum sum that you require to invest, which is actually a very little amount. And then not only that, Warren Buffett actually has a way of generating cash on a weekly or monthly basis, and we call it the cash flow option strategy. And then at the end of the class, because you invested time, we're going to pass you a hard copy of my latest book called Value Investing Simplified. Now, the keyword is simplified because, we want to keep things simple. And the book forward, right? The book's forward is written by Laura Templeton. I'm really fortunate. And at the same time, we're going to give you a $10 Starbucks gift card, which means that it's a gift card with a stock value of $10, and you can take this card, go to any Starbucks and buy drinks. So in other words, kopi, Starbucks kopi is on us. Yep. And just to let you know that this book is highly recommended by Lauren Templeton. And if you bring at least one friend to this masterclass, your friend will also receive the book, also receive the $10 Starbucks gift card. And because you make an effort to bring your friend, we'll pass you $20 of NTUC, a voucher. You can shop for your Chinese New Year goodie, as well as $20 movie tickets from Golden Village. Yeah, so it's really good. The 2 links, let me see, the links are already there. Yeah, just to let you know that our master classes fill up pretty quickly. Pretty quickly. So let me see. Yep, so this is a summary. Yep. Okay, so let me share with you what's going to happen. Laura Templeton has already spoken, and followed by Dr. Todd. Now, I'm the last speaker, so please stay with me, right? Doesn't mean that the 2 keynote speakers spoken suddenly, all disappear. Let me share with you my segment. Now, for my segment, I'll share with you one case study applying what you have learned from Laura Templeton, which is the Templeton's way of investing, of trying to buy a good business at the rock bottom, at the points of maximum pessimism. By the way, I've heard Laura Templeton speak quite a couple of times. 2018 was the first time that I saw her speak live, and then subsequently I followed her on a YouTube channel. I'm quite sure. By the way, in case, maybe I just need my colleague to post the YouTube link where they can subscribe. Now, in case you want to follow Laura Templeton, I'll just ask my colleague to post the YouTube link now in the chat. Once the link is posted, you just need to click, one button pops out, and then you just click subscribe. Okay, so let me go back to my story. So every time when I hear Lauren speak, there's always something new. Yeah. So for example, if you speak for 15 minutes, doesn't mean that we have to remember all the stuff that she has shared during these 15 minutes. Sometimes it's just one thing that truly matters. Yeah, I was paying very attentively to what Lauren was speaking. So let me just share with you, there's one thing that I've learned throughout Lauren's presentation, right, was she said specifically that in her company, because she's a professional fund manager, she manages her own fund, she specifically said that in her office, she always look at areas where it is so-called manifest the points of maximum pessimism. Yeah, because most of us, we always look at points of maximum optimism. For example, right now, you always hear people talking about, oh, I want to invest in the upcoming thing. Yeah, upcoming thing. For example, in the early days, couple of years ago, people talk about cryptos. Oh, up and coming. And after cryptos, it was NFTs, non-fungible tokens, up and coming. And then after that was metaverse. So you realize that as of today, those so-called things are a passing fad. Nobody talks about what cryptos, all this, very few. And of course, the next in thing that people talks about is AI. So, yeah, so on social media, you see suddenly a lot of AI gurus all pops up. You can use AI to do this and do that. So if you really want to follow Laura Templeton's YouTube channel, the link is already there. Click on it, just click subscribe. Yeah. Anyway, it's a YouTube channel, so it's absolutely free. And of course, if you scroll a bit up, you can see the two links. Yeah, so you just need to click on the two links. For those people who are really new to us, click on the two link, register for our upcoming complimentary masterclass. Okay. Whew. Yeah. Yeah, just to let you know that it's been a long 6 months that we are preparing for this session. Okay, so what am I going to do? Now is my segment, right? Whew. Okay, let me pull this up. My segment will be just as interesting. Let me... Yeah. Okay, my slide should be up just to make sure that my colleague can see my slide. It's all good, right? Okay, my segment will be about one case study, and I want to apply, literally apply on what I've learned from Lauren Templeton as well as Dr. Hott. Okay, so here it goes. Now, in the next maybe about 40 minutes, 45 minutes, I'm going to talk about one company that I personally invested. And this company is a US listed company, and it's called Paute Group, ticker symbol PHM. Yep. Okay, so let's get started. Ready? Detail. Now, just to let you know that the context of this Paute Group case study is to solely illustrate the application of value investing methodology as well as various valuation methods in the context of realized companies for continued learning of value investment methods and investor education. So I'm going to skip those in black. In no event shall VA or me be liable to any one of you, guest or third party, for any damages of any kind arising out of the use of the content shared here. There's a whole lot of things. So remember, I'm not licensed by MS, and I cannot do things like, I recommend, I suggest. Which is why if you ask me a question like those, you will never get an answer from me. Okay, so the information provided in this document is meant for educational purpose and is in no instance to be regarded as investment advice. Yeah. Okay. So remember, we are not liable for any losses incurred from investment activities and so on. So let's kickstart this journey. Now, let me just share with you the intention first, even though I shared that it's one of the company that I invested in, I think about 2 years ago. Yeah, 2 years ago. Now, I would like to show you the framework. I still remember yesterday, Robert G. Allen was saying that in order for us to do well in something, we must have a system. Yeah, I'll always remember the system. Then you talk about people and mindset and so on. So let's focus on system. So the system I'm using, right, incorporates Sir John Templeton's way of investing as well as the Warren Buffett's way of investing. So there must be a framework. So I do not mind sharing with you the framework. Yeah, so if you want, you can take a photo of this. This table of contents are actually the framework. Yeah, so I pause here for a few seconds for you to digest in case you need to take a photo and so on. Okay, so the framework. So I'll go through one by one. Yeah, so in order for us to invest, we need to be very competent in what we are investing in. Yeah, so the reason why most people lose money in stocks because they toss in money, right? Thinking that it's a game and thinking that stocks is just a number that goes up and down. Yeah, so maybe they watch a YouTube video by some influencer and then they dump $10,000 into a company called, let's say, Palantir. If it's so easy, right, I think our government wouldn't have increased the GST from 8% to 9%. It cannot be so easy. So we have to fully understand what a company is all about. And not only that, we need to have some form of edge, competitive edge. Now, so once we know or fully understand the business, preferably seeking out for simple one, we need to know what makes the company special. Yeah. So in Warren Buffett's word, we look at the company's economic mode or rather durable competitive advantage. And companies like human beings, we don't exist like an island. There's always competitors. Yeah. So why this company and why not other competitors? Yeah. Then we will look at the management. Remember, I'm explaining the system, right? The framework. Yeah. We need to look at the management because companies are just empty shell, right? Run by companies. Yeah. So it's very important that the company has good management, honest, hardworking, with integrity, and then they have a skin in the game. Skin in the game. In other words, preferably they own a substantial amount of stake in a company. Then we look at the financials because the numbers don't lie. Numbers always tell the truth. If they're doing well, they'll be doing well. And nothing is perfect. We look at the potential risk. It's always a risk to reward. And then eventually, hopefully we can buy at a significant discount from what it's worth. Yeah, so this is the framework. So I'm going to go through one by one. 1, 2, 3, 4, 5, 6. Now, after I'm done with this, then make a very short announcement and subsequently will be the lucky draw. So here it goes. Yeah, now Palte Group is one of the largest home builder. If I remember correctly, it's the third largest home builders in US. And the reason why I, so-called pick this company because it's something that I can visualize. Yeah, it's just my personal bias because I don't think I'm good at things that I cannot imagine. For example, shipbuilding, shipyard, oil and gas, cryptocurrency, software, semiconductors. So these are things that I don't think I'm good enough to invest. I'm not competent enough. So I stay away from things that is too difficult for me. Yeah, but home building, I could understand. Because I've been to US several times. I've seen their houses. So build houses, the moment you tell me build houses, I could imagine. Yeah, I could imagine. So to me, I think it's a bit easier than software semiconductor. So the company has been around since 1956. The sector is consumer cyclical industry. Now, take note of this word cyclical, right? Cyclical. In US, there is a total of 11 sectors. And under each sector, there are many industries. So Palte Group is in this consumer cyclical sector, but the industry is called home building and construction. Ticker symbol PHM, and they are included in S&P 500. Yeah. So these are the forces that is going to affect Palte Group, right? And Palte Group has to be able to manage these external forces so that they can continue to stay competitive and do well. Yeah, do well. So let's look at what it does specifically. Remember, so it's step 1 of the framework. We have to understand the business. Yeah. And you can see this diagram over here is quite interesting. This is circle of competence. So if I draw a circle, like for example, let's say way back in high school, right? I'm really good in table tennis. Table tennis. So I'll put table tennis within this circle because this is a sport that I'm competent. But if I say tennis, yeah, even though there's shortage one word, tennis will be outside my circle. Yeah, so in other words, if I have a stake in 1 million to play a sport against somebody, of course, I will only want to play table tennis with someone. So there's a higher chances of me winning versus playing tennis or basketball or swimming or whatever, because it's something that I'm not good at. Which also means that if you want to invest in something, invest in companies that you really know. Not because you think you know. Very important. So let me just give you some detail about this Palte Group. So remember, it's one of the largest home builder in US, operated for 2 markets, 24 states. Yeah, so the type of houses sold consists of 2 main types. So, which is why you realize that to make you understand better, I've included pictures. Yeah, in US, they have their own terms. Yep. So single family detached home. So this. In our context here in Singapore, we call them bungalows. Okay, bungalows, huh? Then it's attached home. Look like this, right? That's why I think in the Singapore context, we call it semi-detached home. Yeah, so either bungalow or semi-detached home, huh? So they have a couple of categories of target audience. So the first group, they call it first timer. And then the next category, they call it move up. The next one is called active adult. Predominantly, these are people for seniors. Yeah, seniors. Huh? So these are the targets. So they build houses, but they categorize the audience into 3 separate groups. Huh? And Paute Group is like the mother company. Yeah, it's like the main brand. But they sell houses via different brands such as Paute Homes, American West, Centex, and so on. And all this cater for different categories. For example, Paute Homes is focused on this move and luxury. And then American West is catered for this group and so on. So now for each targeted segment, they have one brand, yeah, that serves them. Yeah. So the business segments, in other words, how does Paute Group make money? This is very important. So they make money predominantly from number 1, by home building. Yeah. So how do they do that? Later I'll give you the detail, but very quick one, right? First, they have to acquire and develop the land. Yeah. So they have to buy land first. Then after that, they construct the house on top. And then at the same time, sometimes they also do cross-selling, such as mortgage, banking, insurance, brokerage, and so on. Yeah. And they can also sell land to other third parties. Yeah. So 3 ways of making money as part of understanding the business. And if we break it up into numbers, you see, we are very specific. Yeah, in investing, you cannot say, oh, I think, I feel. Sometimes people invest because they say, oh, I feel that AI is the next big thing, or e-commerce is the next big thing, or people like to buy things online. No, that's not how it works. Yeah, these are so generic that you cannot be used as an investing decision. Yeah, so when we say investing, we have to be very, very specific. For example, when I say 3 ways of making money, yeah, very specific. Yeah, 97.2% comes from building homes. Very specific. Financial service, almost insignificant, 1.9, and the other one, let's say, is only 0.9. So in other words, if something happens to this part, it will greatly affect their sales revenue. But we must understand that revenue is a vanity. Vanity, yeah? And profit is sanity. Yeah, so the profit margin is 16.1%. So what does it mean? It simply means that if they have a sale of $100, after minusing off all the expenses, $16.10 is left. By the way, as I move on, you may come across some financial terms. And in case you're like me, right, a graduate or doctor taught biochemistry graduate, we can learn things over time. But unfortunately, these are the lingos of money. There is no way you can become a good investor without understanding the lingos. Yeah, so it's a small price that you have to pay. Okay, I got it right. So in other words, if you're watching this presentation, you find that, hey, some of these terms are a bit new to you, and then the links are already in a chat, please just click on any of the link, attend the masterclass. After I attend the masterclass, if you find that things are not suitable for you, I think it's fine, right? Yeah, I mean, nobody loses anything. Yeah, not only that, you have a copy of my book as well as a $10 Starbucks gift card. So now the question is where? So you know exactly what they do. They are home builder, 97.2% of their profit is being made from home building. So where do they build these homes? Yeah, in summary, predominantly, they make their money predominantly in US. US, third largest builder. Broad and balanced geographical footprint. I think broad is quite subjective, but what it meant is in the whole US is pretty well spread. And here you can see we are very precise about where is the largest segment. For example, Florida was 24% and so on. Okay, very precise. So investing, you have to be very precise of the information that you're talking about before you make an investment decision. Yeah. So where? So what are the types of company? In our value investing program, we talk of predominantly 6-star company, and I borrowed the 6th category from Peter Lynch, who is a very famous value investor. And he said that predominantly the 6-star company, fast, medium, slower, This one is a turnaround, asset play, and one is cyclical. Yeah, usually we'll avoid turnaround because most turnaround companies don't turn around. Asset play and cyclical is a bit more complex. Yeah. So in this case, let's look at the types of company that Paote Group falls into. So we look at this term called earnings per share. So in other words, if you buy one share of the company, how much profit the company is generating. So in this case, we start way back to 2014 until the most recent year, 2022. Yep. And if I plug in this number, right, you can see that at least for the past 10 years, the company's earnings per share has been growing 31% on average. Yeah, year after year. And anything that's above 20% is considered fast growth. And the reason why I'm interested in this fast growth company because, yeah, of course, it's fast. It's fast. Huh? So when a company EPS grow fast, the share price will also grow fast. By the way, we cannot rely just solely on a $600 assurance package. We have to learn how to invest. Yeah, they pay very little dividend. Usually the average dividend yield for a US company is 3%. So this amount is less than 3%. And it's understandable because it's a fast growth company. And just to let you know that if you buy any US listed a company, right, your dividend, there needs to be a deduction of a 30% withholding tax, which means that right now, let's say you use Momo Tiger or whatever, you own some shares. And let's say if you're supposed to receive $100 of dividend, in your account, you only see $70 because 30% has been so-called deducted, yeah, as a withholding tax. Yeah. So let's talk about how they generate revenue. Since most revenue comes from building homes, yeah. By the way, a lot of effort is being put into this presentation because as much as I can, we want to summarize, put in pictures, explain in the simplest form possible. So number one, to build houses, of course, you need land. Yeah. And then you need to acquire the land before you can build a house. Then after that, you need to develop the land. Okay. So after you develop the land, you need a salespeople, right, or Paote Group to start selling the houses. And only when a deal is closed, then you build houses. You know, in Singapore term, it's like the Singapore called BTO, right? Build to order. You order first already, then they build. In other words, if there is no order, you don't build, right? Yeah, otherwise you build already, nobody's going to buy. Yeah, and you want to build according to the customer's specification. Then after that, you hand over. Yeah, very simple, huh? Yeah, so there's a bit of detail. I'll go through this very quickly. So remember, I shared that step one is land acquisition. Yeah, there's a lot of sub processes. You need to select the right property and then acquire the land. Then after that, develop, construct the facility, you know, some form of management and so on. Yeah, so you can see here from our pictures over here, it's not so easy, right? It's not so easy, huh? Yeah. So how do they sell? Once they acquire the land, how do they sell? There are many ways. I'm not going to read out all these things, but these are the ways that the sales side of Paote Group promote. And of course, the sales team, right? The sales staff is also entitled to some commission if they sell, so that the salespeople are more motivated. They also have third-party sales broker to increase their sales. By the way, just to let you know that Philip Fisher, which is one, I would say, a role model of Warren Buffett. He once said that one of the key things in any organization, right, is to have a very strong and good sales force. It's a very simple sentence, but wow, I realized that even for a small company like mine, I need to have a very powerful sales force. Yeah, powerful sales force, huh? Yeah, so home buying processes, maybe I'll skip this. Yeah, this is a bit administrative, right? But at least to show you that I've done my homework before I invested in this stock. Yeah, so remember BTO? BTO, build to order, right? Build houses on order. Yeah, so Paote Group will start home construction once the purchase agreement is signed with their customer. So eventually they'll hire contractors, buy all the stuff, and then put everything together, and then they will complete the house. Now, maybe I pause here for a short while at this partner. Yeah, just to let you know that you realize that it's a very brick and mortar business. Yeah, you cannot like build houses online. Yeah, everything has to be done with manpower. So it's like building houses in Singapore, the HDB, you can see the foreign workers, the contractors, and so on. which also means that if another episode of COVID strike, it may affect their business. Later on, there's a segment which is the risk factor. I'm going to talk about this. Yeah. So I still remember during the COVID period, some Malaysian workers, they actually went back. Yeah, went back. And then workers also cannot come in. So their business will be affected if manpower allocation is affected. Yeah. Okay, so they will complete their homes and title deeds. This is very important. And title deeds will pass to the home buyer. Yeah, which also means that since Paute Group bought the land, built the house, so the home buyer owns not only the house and also the title deed to the land. Yeah, because otherwise the customer will own the house, but the land belongs to Paute Group. Okay, so they own everything on top and own everything at the bottom. Yeah. So right now we fully appreciate most of the money comes from home building. I talk about how they build houses, the different steps, right? Yep. So the key thing is when we invest in a company, we make decisions based on what they have done in the past. Yeah, but we need to understand that if I buy the stock today, it's like if I decide to get married today, I have to make assumption that if I get married today, the person that I marry is a good person based on the data that I've gathered in the past, and I also have some assumption into the future. Yeah, because when we own a piece of business, we are making assumption into the future based on the data that we collected in the past. So let me just share with you what are the growth drivers. Yeah, growth drivers that I felt that in the future, they can still continue to have growth so that when my money is being parked with them, my money will continue to grow. Yeah. So these are future plan. They still want to improve on their product, superior home building. Yeah. They want to increase the use of land options. I'll talk more about this later. And this is the one that I find most interesting. They want to expand to new market, of course, within US. A bit of detail. So I'll just go through very quickly. Yeah, so how do they drive superior home building profitability? Yeah, so they have some stringent underwriting process, strategic use of build to order. Speculative houses, this is not really the word speculative, but it's a name given to their type houses to cater to diverse buying group. Okay, so here quite a number of generic things. Use standard material, follow industry practices, work with suppliers and so on. Yeah, but at the end of the day, whether what they do is working, we have to look at this profitability. So number one, they want to increase their profitability. So later on, when I show the numbers must go up. So second thing, right, they want to increase or improve the use of land option. So in other words, they will defer acquiring land until Paute Group, right, exercise the option to purchase. Now, in case you're like real estate agent, I think you will understand this. Yeah, it's very important for them not to buy land first because at the end of the day, if the client back out or whatever, they'll be in trouble. Yeah. So in other words, they will defer acquiring land until they can exercise the option to purchase. So that's to mitigate their risk. Mitigate the risk. Yeah. So this is the interesting part. They want to expand because when a company grows, the share price will grow, then our money will grow. Yeah. Strategic expansion, the new market, you can see this star over here, right? This one state they are going to enter, and the new market is a Salt Lake City in Utah. Utah is the place where Robert G. Allen is staying. Greenville, right, and then South Carolina. Yeah, and their focus for this new market will be on entry-level buyers. Yeah, which means that the pricing will be at a lower end. It's like 3-room, 4-room flat. Yeah, and their expansion is via community openings. Yeah. Okay, so the good thing about knowing the growth drivers is we know that they have a plan. The next one, of course, is to follow through whether does the management really stick to what they say. Yeah. So the next one, based on Warren Buffett's way is we will only invest in companies with an economic moat. Yeah, or rather a durable competitive advantage. Now, in the early days, Kodak has a competitive advantage, but unfortunately, the durability, right, was disrupted when digital camera came about. Yeah, so it's important for us to invest in a company with not Kodak, but in a company that's a durable competitive advantage, so that when you leave your money with the company will continue to do well. Yeah, do well, Let me give some examples of economic modes, qualitative for this Paute group. First is economy of scale. That means the more houses they build, the more efficient they are. Second thing, in US, Paute group has a brand name. They are recognized and as a trusted brand over 70 years. Yeah, and the best part is, remember, they cater to different affluence level. So the different brands are to cater to different various levels of option and amenity needs. And of course, to build houses, they require a license. Without a license, you can't really buy land and build houses. Yeah, so that's qualitative. So let's look at the quantitative. Now, because numbers don't lie. So in order for us to know that this company really has economic mode, we look at these two numbers. Yeah, one number, don't worry, you have to look at two numbers. One is called ROIC, which stands for return on invested capital, versus WACC, which is weighted average cost of capital. It's a bit technical term, right? Technical term. Maybe let me just explain in the simplest form. So let's say in a context of Singapore, some people like to buy condominiums, buy houses, and so on. So if you do not have enough money, what do? You take a loan, right? If you take a loan, you need to pay interest. So the interest that you pay, right, it's like an example of a WACC. Then let's say eventually your condo came about, your bungalow came about, and then you rent out. So maybe your interest payment 1 month is $1,000. And then you're able to rent out your house, right, for $2,000. So you realize that $2,000 bigger than $1,000 is a good sign, right? So same thing for companies. Companies sometimes borrow money. And when they borrow money, it incurs interest, which is this like $1,000. Yeah. And then after they borrow money, of course, they want to make more money out of the borrowed money, right? So that if this $2,000 is bigger than $1,000, then it's a good sign. Yeah, good sign. Huh? Yeah, so the key thing is, how do we look at the numbers? Now, over time, we want to see the difference between these two numbers. We want to see the gap is getting wider and wider. If the gap gets wider and wider, yeah, the company has a widening mode, in which, in this case, it is. Yeah, it is. So Paute Group, quantitatively do have an economic mode. Yeah. So let's look at some of the competitors. This Paute Group. Paute Group is not the only home builder in US, of course. Yeah. So these are the list of competitors. Yeah, all companies, they're competitors. Even Coke has Pepsi as competitors. Yeah. So the key thing that I want to share with you is, these competitors, this whole list, can we find a good business and can we buy it at a really huge discount? So let's move on. Yeah. So when I did a comparison using Paute Group and some other business, two other companies stands out: NVR Inc. and Skyline Champion. Yeah, but unfortunately, I really have no time to go through these two companies. But I just find that the numbers for these two are pretty good. Pretty good. Yeah, for example, Paute Group is 12, and the other closest number is this. Yeah, you see the number is bigger than Paute Group. Okay, but this just to let you know that I would think out of this whole list of home builders, this company called NVR as well as Skyline is also a pretty good company. Yeah, so some information NVR, but I don't want to go into detail, right? Yeah, go into detail. Also, same thing, home construction company, and the other one, Skyline, right? Yeah. Skyline is a bit different. They are the home builders of manufactured and modular homes. Yeah, modular homes. And just to let you know that competitors can be categorized in two segments. One is called direct competitor, and the other one is called indirect competitor. Now, let me give an example of indirect competitor. For example, let's say Facebook. A Facebook direct competitor, it could be TikTok, because these two companies want to fight for advertising dollar. But Facebook, indirect competitor, it could be Netflix. It could be anything that get the audience attention away from Facebook. So in other words, if you look at indirect competitors, it can be small little things like recreation vehicles. Because if they stay in RVs, then they don't need a home. Yeah, they do not need anybody to build a home for them. That includes all these things. Prefab homes, motor homes, rent homes, and so on. Yeah, it could even be a yacht. Some people stay on a yacht. So these are indirect competitors. Yeah. So once you have fully understood what Paute Group is doing, predominantly 97.2% of their money comes from building hopes. Yeah, where are they? In US. Fast growth, they have a future plan in place. So let's look at who is the captain of this boat. Yeah. Now, this is the CEO's background. His name is called Ryan Marshall. He's the president as well as the CEO. He's a CEO of Palte Group since 2016. So I think it's about 8 years. 8 years, right? 8 years as a CEO, but he has been in Palte Group for 13 years, involved in various functions and all this thing. So from a value investing perspective, we prefer someone who is running the company with a lot of experience in the industry. Yeah, so experience is important. So we cannot like take a civil servant, put in Singapore Press Holding, and then ask him to run a business. No, it doesn't work that way. We want people, right, with experience. Yeah, so a general, better stay as a general. So let's come back here. He's also the former executive or vice president of this. Yeah, some of his credentials, this is education. Yeah, so he's been running the company, remember, right, for 8 years as a CEO and 13 years in Palte Group. Yeah, so once we have understood that this CEO have vast experience, we also want to understand his compensation plan. So at least this is my system of finding a good business. Okay, before I go into this, just to let you know that there are companies in Singapore in which the company is losing money, yeah, but the CEO pay himself very well. Yeah, so sometimes these don't make sense. So it's very important that the CEO's compensation, right, has to be aligned with the company's interest. Only when the company do well, then you get paid well, right? So if you are not, if the company is not doing well, why should it be paid well? I don't mind giving you a specific. I think I read the annual report of a local listed company called Mary Chia. I think the CEO is called Wendy something. I can't remember her last name. And a couple of years ago, when I read the annual report, her compensation was a range. They didn't state the specific. It was 250,000 to 500,000, which is $250,000 to $500,000. But during a time when she was compensated this amount, the company was still losing money. Yeah, so at least to me, it doesn't make sense. Yeah, that doesn't make sense. So let's look at the company's compensation plan, at least for the CEO. So a lot of numbers, but let me just zoom in. This CEO's basic salary is 1 million. Yeah, he has stock options, which also means that if the company stocks do well, he will do well. And he has some form of non-equity incentive plan. In the next slide, I'll share with you what's the detail. But in short, right, in 2022, right, his compensation was about 14 million US dollars. Very similar to a CEO of Gapta, 15 million. 10 million. Yeah. Hey, wait, hang on. Let me see. Okay, yeah. So, like for example, for this non-equity incentive plan here, there are some details, but I don't want to go into this because it may be so boring. But in short, I just want to share with you that his basic pay is 1 million. The rest are all tied to the company's performance. Either is it short-term or long-term. Yeah, so I like companies with such a structure. Yeah. So we also want to look for companies where the management has a skin in the game. So if you look at the top direct shareholders, based on year 2022, you can see Ryan, right, owns about 55.7%. Yeah, so what am I trying to say? He has skin in the game, which means that if the company don't do well, he don't do well. Company do well, he will do well. Okay, very important. And who are the institutional ownership? This is just for info, right? Vanguard, BlackRock, State Street. By the way, you can see Vanguard, BlackRock, and State Street in almost every big companies. Yeah, but it's very dangerous, right, to buy stocks because any of these three bought it. Okay, very dangerous. The most important thing is the individual, not this, because these are companies as investors. These are not individual. So let's look at the numbers, because numbers tell the truth and numbers don't lie. So the first thing is to look at the company's revenue. Yeah, so revenue uptrend from a value investing perspective is a pass. Gross profit, the formula is here, is an uptrend. Value investing perspective is also a pass. Net income, right, that means you take all the revenue minus all the expenses. Yep, here is also pass. This is definitely much better than some funny companies that are listed in Singapore, right? You know, Mary Chia, Noon Talk, all this. Like if you buy this stock month as well, you can consider S&P 500. So you look at earnings per share uptrend from an angle of value investing methodology is also a pass. Yeah. Okay, so this is gross margin. And from the gross margin, if we look at gross margin in relation to other of its competitors, so you can see, right, in the sector, that means 11 sectors, very large. Yeah. Now, this look like a skewed normal curve. In other words, most of the companies are right here. This is like a norm of the normal curve. So you realize that PHM is skewed to the right, which is a good thing. The more right it is out of the normal curve, the better it is. And if you look at the industry, I think industry is a better comparison as compared to sector. You can see industry, right? This is a normal curve. The norm is here, is skewed to the right. In other words, Powta's gross margin is on the higher side. Yep, so it's a good sign. Yep, from the net margin wise, yeah, it's also on the right side of a normal curve. Again, it's a good sign. Sector, oh my goodness, is here. Yeah, it's a good sign. All this, it says something good about Powta Group as a company. So let's look at the cash flow from operation. Overall, yeah, a bit jagged, but if you draw a best drawn line across, yeah, based on value investing philosophy, right, is a pass. Yeah. And let's look at the company's efficiency of making money, ROE. Yeah. So what does ROE 31% means? 31% of ROE means that if the company invested $100 in a business, yeah, they will get $31 back. Yeah, in terms of profit. Yeah. So I still remember just now, Dr. Todd was saying that the Buffett's criteria, if I remember correctly, I think it's 15%. Yeah, so we want something that's more than 15%. So let's look at the 15%. Can you see here is 10 here? 15, I think it's somewhere around here. Yeah. So there are only a few spots that is below 15, but do you realize that over time, yes, went up to this number? This number is already 30. Yeah, so from a value investing angle, it's considered a pass. And that also applies to ROA. ROA is 18%, means for every $100 of assets, there's $100 worth of asset the company has. It has helped the company to generate $18. Yeah, so we want it to be more than 7. 7, maybe it's around here. Yeah, I think it's good. Majority online, still uptrend above 7. So it's a pass. And of course, Dr. Todd has also talked about the debt to equity ratio. Buffett want it to be less than 0.5. Yeah, so over time, right, the debt equity ratio of Powta Group has dropped below 0.5. This last 2 years is 0.5. Current ratio, we want it to be, current ratio and quick ratio, we want it to be bigger than 1. This is bigger than 1. This is bigger than 1. Yeah, so based on value investing philosophy, it's a pass. So a lot of technical jargon, like current ratio. Oh my goodness. That's why there's no other choice but to learn. Yeah, you cannot make money by knowing very little. Yeah. So let's look at the maybe I'll skip this. This is a bit technical, right? Yeah. So let's look at their quarterly, their most recent quarter. For the most recent quarter, their sales has increased slightly, just slightly, right? But overall, it's still increasing. Yeah, slightly is about 3%. And then their average sale price has also increased by 2%. And I still remember Dr. Todd said just now, right, that you'll be best that you can increase the price without losing customer. And he told the story about See's Candy, where See's Candy's price increased by 10% almost every year, but people are still buying. For example, if you notice Starbucks price has gone up, Yakun price has gone up, but people are still buying. But there are some products that are very competitive. The moment you increase the price, they will jump from one store to another store. Okay, yeah. Everything looks nice for the quarter. Yeah, but no company is perfect. No company is perfect. Let's look at their possible risks, and then we end up with the valuation. Do they need specialized labor? The answer is yes, because building homes, right, you require specialized labor. So the consolation is they don't rely on 1 or 2 people. Yeah, if one is gone, hopefully they can replace it. Is the competition manageable? To me, yes, because I see that across time, the net margin was increasing. The net margin was also one of the highest in the sector. So industry ability to increase price, slightly yes. New technology, will it help? You will help them. You will not harm them. Yeah. So what are the risks? Now I'm just going to slow down here for a short while, just to let you know that the housing market is actually cyclical in nature. So there are 4 phases. So when it's booming, it's booming. If it's not so booming, you'll be at a recession. Yeah. So maybe this is a point of time where Lauren probably defined as the point of maximum pessimism. Yeah. So this is one risk, cyclical. Yeah. So how do we mitigate risk? We're going to talk about it later, right? Yeah. And labor, construction material shortage, for example, like COVID, yeah, it will affect them. Yeah. And then recently the EPS went up. Partly is also because there is an increase in housing demand. And then the other one is also the high inflation environment. So for example, right, I think even in Singapore, the interest rate has also significantly gone up. So if the interest rate has gone up, that means I have to pay more mortgage payment. Yeah. So let me give one example. I think about 4 or 5 months ago, DBS sent me a letter because I stay in a HDB, a 5-room point block. So what they did was, I think about 6 months ago, they sent me a letter. My original interest rate for DBS was, I think, about 2.2%. Yeah. So the next thing I know is when they send a letter, they say, hey, Mr. Chang, we reflect from this day, your interest rate will be 5.4. Oh my goodness, it's almost 100%. Yeah. So actually, I was quite upset with DBS. Yeah, until today. Yeah, until today. Huh? So the high interest rate actually will affect home buyers. And in Singapore, I suppose those young couple who want to get married, if the interest rate is high, it's going to deter them. And that applies the same for US. Yeah. So this is my last few slides already. So let's talk about valuation. Before we talk about this, it's important for us to know that even if the business is good, you can still lose money by buying at the wrong price. Yeah. And Professor Benjamin Graham has this concept called the intrinsic value. Yeah. So how does this work scientifically? So let's say if a company is worth $10. Yeah. If you want to make money, of course, you want to buy this stock, yeah, which is worth 10 at a lesser amount. So for example, if it's $9, yeah, the stock is worth $10, right? But if you buy at 8, you actually pay a $1 discount, right? Buy at 8 and so on. So in other words, if you really want to do investing, we have to buy below how much it's worth, which means that you have to know how much it's worth. But if some of you who are watching this right now, you have some stocks in your portfolio, you have no idea what the companies are, you have no idea how much each stock is worth, you are basically gambling. Yeah, so you cannot blame anyone if the share price drop, because if you buy something that you do not understand, you have no idea what to do when the price drop. Yeah, so let's come back here. So if this $10, this line over here is called the intrinsic value. We always want to buy below the intrinsic value, then you sell above it. Yeah, then the difference between these two is called capital appreciation, which is why in order for you to buy low, sell high, I mean, how low is low? Yeah, the low must have a reference, and the only reference is intrinsic value. Yeah. Now, bearing in mind that based on what I've learned from Laura as well as Dr. Todd, there are various ways of evaluating a business, but Warren Buffett specifically used a discounted cash flow. So here it goes. So here I'm using a discounted cash flow method. This Paute Group. I'm plugging in the past EPS. Yeah. And I have this number 31%. So in other words, the company is a fast growth because it's more than 20%. And what I did was, okay, so the past Paute Group has been growing at the compounded annualized rate of 31%, 31. But in the future, I'm going to make some conservative assumption that the company can only grow at 7% for the first 10 years and 2% for the next 10 years. And then I've added in a 30% margin of safety. Now, what do you mean by margin of safety in case you're not an investor? So let's say you build a bridge, yeah, for any vehicles to pass through. You build a bridge, Let me draw a car. Let's say I cannot draw. Okay, a car, right? And you're an engineer. You build this bridge, and this bridge could be able to hold a weight of 100 tons. 100 tons. So in now, any vehicle weighing 100 tons and below, you can actually drive past safely without making the bridge collapse. Yeah, but Warren Buffett, right? If Warren Buffett is the engineer and he built a bridge that could sustain the weight of 100 ton, what he will do, right, at the beginning of the bridge, he will put a signboard. And the signboard, he will say maximum 70 ton, leaving behind 30 ton as a buffer of error. Because some funny people maybe will drive a 80 ton truck or vehicle that goes through. So same thing, a projection of any form of intrinsic value is always an estimation. So we always want to have some buffer. And this buffer is known as margin of safety. So plugging all this into question, right? The target buy price is 106. 106, huh? So this first point. The second point is when I look at their most recent quarterly result, which are these numbers, I add these three numbers up, is 8.49. Yeah, and this is results for 3 quarters. If I add another number, let's say it's 3, I'll end up with maybe about 11.5. 11.5 is very similar to their recent result. Yeah, so which is why my adjusted growth rate, I didn't put too much. I put a very small number. So this is my assumption into the future. So remember, 106, right, is the target buy price. So what is the share price as of today? The share price as of today is about 106. Yeah, so this company is not overvalued. This company is not undervalued. This company is at fair value. So as long as the company is at fair value or undervalue, at least based on Warren Buffett's perspective, it is still a good call, right, to invest. Yep. So it's 106. So remember, Lawrence talked about buying businesses at maximum pessimism. So you can see my purchase price. Yeah, so I bought Paute Group at $44. Right now it's 106. I think between this price to this price, I think it's about 2 years. So my return is 137%. Yeah, so remember, we can make more than 100% by not gambling in cryptos or whatever. We can invest properly. We can invest properly, yeah? Yep, so this is one that so this is one example, right, of the case study that I want to share with you. Yeah, so I'm going to pause here for maybe a short while. Are there any questions regarding this case study about Paute Group? But remember, at the end of the day, I want to show you the framework. Let me just pull up my slide about the framework again. Yeah, you must know the framework. Without the framework, there's practically nothing you can do, yeah, to make money. And then the next thing is you need to know financial terms. Yeah, let me just share this screen again. Yeah, so this is a framework. You must know the financial terms. Yeah, without understanding financial terms, I mean, how are we going to invest? Yeah, so this is a reality. Yeah, so this is a framework. Yeah, maybe a gentle reminder in case you want to take a photo, you can just take a photo of this. Remember, different people has different ways of doing things. Lauren did say that, yeah, put in a small amount of real money into investment and then have a feel. What's a response to your action about purchasing? And then she said that it's a highly individualized exercise. Yeah, let me see. I think there's one question. Right? How do we have access to intrinsic value calculator? This is only, unfortunately, right, for our graduates. Unfortunately, that if you are graduates, you have access to this. Is there some science in setting the adjusted growth rate? It is both art and science. From a science perspective, you can refer to the annual report. Some management, not all, some management, they will say we estimate our future growth rate to be at a certain percent. Yeah, so if you want to be really, really scientific, you can only make reference to the management's opinion. Can you evaluate mutual funds this way? The answer is no. Yeah, because funds consist of many things. I have no idea what's inside. So you can't really calculate intrinsic value, right, for mutual funds. And by the way, don't spend too much time on mutual funds because most mutual funds or hedge funds, right, cannot beat a low-cost S&P 500 index. So in case some bank's relationship manager want to sell you something, I think don't waste time. Yeah. Okay, this is a very good question, right? Ho Wei Shin, right? How did this company come into attention? Do you use a screener? Now, yeah, this is a very good question, right? Remember, if you go back to Lauren's presentation, she shared her step. Her step is number 1. She add in the criteria. She said she has Excel file, I think some mechanism. Yeah, and then she runs this screening process daily. I still remember. She said, run this daily. And every single day, she will see some companies appearing again and again. And then suddenly, one day you see one anomaly. Boop, one company that pops up. Yeah. Oh, then she'll find that is very interesting. Yeah. So let's go back to the question by Wei Shin, right? Yeah. How do I come to my attention? It's a screen, using whatever criteria that I know. I screen. And then suddenly this one pops up. Then once this one pops out, I want to know what's happening. Is this circle of competence? Yeah, and then of course I use this framework, this 6-step framework. Yeah. Okay, so we have the screen. Let me see where there's suddenly a lot of questions. So I'll answer as much as I can. Can I get these case studies right for learning and reference? The answer is no, but I think maybe one of my colleagues can post the investify symposium. I think you can purchase the access, right, to, I think it's 1490 or something like that. But you cannot have site. These are intellectual property that are intellectual. When is the right time to sell? It's difficult to answer that. If there's a recession, yeah. So some quick take about when's the best time to sell is only when a company is overvalued, when a company loses its economic mode, or sometimes you have better opportunities, you have insufficient money, you want to sell A by B. Yeah. What criteria do you personally use? You attend one of the classes? Time is just too short because it takes 4 days for me to explain. Yeah. Once you have the intrinsic value above the line, is overvalued. A management team evaluation is a qualitative, so there is no scientific tool to say, hey, this company is good or bad. But we can infer from the numbers. For example, if the company has been losing money, the company has been, let's say for the past 10 years, out of 8 years is losing money. I mean, we can safely conclude that the management is not so good. Not so good, huh? So this is one way we can assess the management ability from numbers. Yeah, then the rest is a bit qualitative or hardworking. Yeah, all this are quite qualitative. When the share price is concluded under value, you're comparing against the intrinsic value. So question from Yi Hao, right? 2 years ago was ideal time. Most stable stock have nearly doubled since then. Yeah, every day there's always something to invest. Yeah, we buy at either intrinsic value or below. When it's above, okay, when it's above intrinsic value. Okay. What are the key differences in real estate development compared to Singapore context? I'm not very familiar in real estate, so unfortunately, I'm not qualified to answer that question. How did you get the chart? I'm not very sure which chart that you're referring to, right? So I'll just take one question. Just now, Laurent Templeton, right, mentioned about maximum pessimism. Do you think China stock is in maximum pessimism? I think, Wei Shin, you may need to paraphrase your question because you say, do you think China stocks? I mean, there are like 5,000 plus China stocks. Yeah, so if you ask question, every single China stock in maximum pessimism, the answer is no. Because your question is are all China stocks in maximum pessimism? So the answer is no. Will you be explaining a bit about CF West here today for us? Rick, the answer is no, because that requires about half a day to explain. Will you still buy if there are insiders or the company selling their shares below market? So remember, people sell shares for various reasons. We have no idea what is their motivation for selling shares. So selling shares not necessarily is a bad sign, but buying shares usually is a good sign. Okay, good. So I've answered most of the questions as fast as I can. So what I'm going to do is, let me see, right, what is my next partner? So I'm just going to make a very short announcement. By the way, before that, hopefully you have learned a lot from Lauren as well as Dr. Todd. So if you look at Lauren's presentation, it may sound very philosophical. Yeah. And then for Dr. Todd, it may also sound like, hey, he's telling about a Warren Buffett's history, seems to be quite simple and so on. But from my perspective, it's very different. From my perspective, if I could travel back in time, I wish I would sit in exactly the same class listening to Lauren and Dr. Todd. Because the first thing in getting investing right is really get the philosophy and the foundation right. Yeah, if you get this wrong, nothing else works. Yeah, so even though it sounds simple, it's very, very important. Okay, so what I'm going to do is I'm just going to make a short announcement, and then after that will be the lucky draw. Yeah. Oh yeah, let me just get my slide back up again. So remember, can you just take a photo of this framework, right? So you know that's the framework to investing by at least my framework. Yeah, my framework. So I give you a few seconds to take a photo, right? Okay, there are still, while some people are taking photo, I just answer some of the question quickly. Steve, so do you invest in China companies listed in US stock exchange? The answer is yes. But right now I won't, because there's a negative perception of such a China company. So right now I won't. What about China stocks that have fallen off a grace like maximum pessimism? Wei Shin, I think things are not so simple, right? In a sense, I think you need to learn how to invest and understand what's happening. You see, for companies such as China companies that are listed in US, we must understand there are many other forces that affect the price. So for example, for Alibaba specifically, one external force in which investors has no control is the relationship between US and China. Yeah, so Biden don't like Xi Jinping, so that's one. The second thing is because of this, there's a threat. There's a threat that Alibaba may be delisted. So the second thing. The third thing is Alibaba's is no longer growing as fast as they used to. Yeah, so all this negative news affect people own the stock, so they start dumping the stock. And because they dump the stock, I think the share price dropped from an all-time high of about 300 plus to maybe about 80, 70 plus. Okay, so a lot of factors, not so easy, right? There's no clear straight answer. So do you focus only on the local company? The answer is no. My entire portfolio, 90% are US listed company, 10% are Singapore company. I tend to prefer US listed company because for US listed company, I can sell options. Data integrity may affect value investing parameters, cross-check. Cross-check is you refer to annual report. Yeah. Yeah, instead of just relying on, some other external source. Okay, done, Okay, good. Let me see, any other things? Okay, this one time message. Okay, so let me just move on to a short announcement and we will proceed with our lucky draw. Now, if we turn way back to Liu Feng's presentation yesterday and also our presentation today, so you realize that investing need to have a framework, which is why I asked you to take a photo of this. Yeah. Now, even though it's just 6 simple points, 1, 2, 3, 4, 5, 6. To understand the business, we have to spend time. To know whether a company has economic mode, we must understand the business. So if one don't work, then you don't have number 2. Yeah. Then don't have one number 2, then there isn't number 3. So all these things comes together. Okay. Now, and all this requires time and some expertise. Yeah. And numbers. If you are a non-finance person, it is going to be very difficult for you. Yeah. So if you want to make money, right, and you want to decrease the probability of losing money, you have to know financial jargon. You cannot just watch a YouTube and then you pump money into the stock. That shouldn't be the way. And any so-called influencer and YouTuber or TikToker, right, shouldn't tell you to buy stocks based on what they say. Yeah, so to me, it's a bit irresponsible. So let's come back to here. Yeah, I think all of us, we have to be sensible enough that we have to understand the financial jargons. And no company is perfect. We have to understand the risk and reward. And eventually, the lower the price that we can pay for, like what Lawrence was saying, the lower the risk. Now, in school, right, we have always been taught the wrong thing. In school, we say, oh, to have high return, we must high risk. Right? You hear this, huh? That's absolutely wrong. Yeah, which is why we learn the wrong thing. Yeah, to have high return, we must take low risk. The lower the risk, the higher the return, the safer it is. And then if you buy stocks, you buy stocks, right? You buy stocks today. Yeah, stock is dangerous in the short term. So in other words, you buy stock today and then you want to know what happened tomorrow. I want to know what happened 1 week later. Yeah, stocks is dangerous in the short term, but stocks is safe in the long term, maybe 3 to 4 years at least. Okay, so there's a framework, right? Yeah, so to go through all this, you must know where to search for opportunities. Again, you must know the jargon, whether it's company is good or bad. You must know the entry and exit. To do that, you must know how to calculate the intrinsic value using various different formulas. And of course, at the end of the day, you must know how to build a portfolio because you cannot show hand, right? Oh, my portfolio only consists of one stock, and that's called Tesla. That's dangerous. That's dangerous, right? That's bad advice. Yeah, so to do that, just to let you know that since the pandemic, which started in March 2020, we have put together a team for you where this team will do all this work for you. Screen for the companies, evaluate, at least from an angle of value investing, whether it's good or bad, know when's the entry exit point by calculating various types of intrinsic value. And of course, most important, we want to build an all-weather portfolio. So these are the team of people. They all come from different fields and they are all good in their own rights. But there's one thing common among them, right, is they love to analyze companies just like Liu Feng. And they follow the framework that I've shared with you, value investing framework. So what we did was yesterday I shared about this project called Project SG, Singapore case study. But this time around, I'm going to focus on US companies. And the reason why I like US company is for a few reasons. Number one is US company has many. I think in total, they have about 3,800 companies for me to select versus Singapore, about 700 plus. And then the next thing I like about US listed companies is usually I can easily find fast growth company. But in SGX, it's quite difficult to find fast growth company. Yeah. Another reason is for US company, usually they're highly liquid. You can buy and sell. But some companies in Singapore, even though they're undervalued, you want to buy, right? They're highly illiquid. Yeah, so this is another problem. Another advantage of investing in US company is you can sell something called options. Yeah. Now, in case you're not our graduates, you may not know what selling options is. Just to let you know, this is one of Warren Buffett's trick up his sleeve, and you can practically generate instant cash on a weekly basis or monthly basis for the rest of life by selling options. So let me just share with you what this project is all about and how VIA can be of help. So let's say today is the 1st of Jan, right? 2024. 1st of Jan 2024. And you become a member of this project. Okay, so become a member and subsequent month. Right now it's January, right? Yeah. So this month we will release 2 analysis. Yeah, and the framework is based on a framework that I've just shared for Paute Group. So release 2. So let's assume that Paute Group is just one of the 2. So I may release another one. Yeah. Then February I'll release another 2. So every month we have 2 to release to you in the inbox. As long as you have a username and password, you can have access to this. And then at the end of every quarter, we will meet online. Yeah, where 2 of our authors will present 2 more companies. It could be a review of past companies. And then for me, right, personally, I will share 6 to 8 option selling opportunities that I've used. Yeah. Then after that, we end with a Q&A. So in other words, it's like investify symposium, but we are very specific. We focus on individual companies. And we'll repeat this for the next second quarter. Meet up, third quarter, meet up, and fourth quarter. So in other words, this membership, right, is a 1 full year membership. Yeah. So in total, you have 24 companies. And typically, we need about 5 to 6 to form a portfolio. Yeah. Not only that, you have access to our past 3.5 years of hard work. Okay. And I'll share with you which are the database. Now, if you look at this screen over here, can you see? Yeah. Can you see here we have a list of companies, but of course I blank it out, right? So these are the dates where we release the company. We categorize them into sectors. Yeah, this is the current share price. We'll tell you whether it's undervalue or overvalue based on the comparison to the different range of intrinsic value. So all this is done for you. Yeah, and this table is the most priceless. Yeah, most priceless. So in total, since the past 3 years, we have found 72 companies, and out of 72 companies, 53 companies, which is about 74%, right, are still undervalued today. And the best part is you can have instant access today, right now. So let me share with you how it works. Let's assume that if you become a member, I think the system will will send you a username and password, correct? If they so now if they register immediately in your inbox, you should be able to see the login details. So once you log in today, right? Yeah. Then you can click on the US case study. Once you click on the US case study, you can play around with some of the amazing features that we have. But the most priceless, right, is this one-page intrinsic value directory. So you click on it, pop. Now our 3.5 years of effort is here. Yeah, at your fingertips. Because you can right now access our database using an app which is freely downloadable. Okay, And then, for example, you can see, right, in March 2023, we released a company called Snyder National, and then this is a ticker symbol. So if I click on this SNDR, click on it, boom, it goes to one page, and you can know more about the company. Profile summary is here. You can also download a copy. There's a paperclip over here. Download a copy where they talk about circle of competence. You see, all this work done for you. Yeah. So that you can save 3.5 years of life. So what's the economic mode? Yeah, you scroll now. These are numbers. Can you see? And it also comes with the valuation, which is the intrinsic value. Yeah, intrinsic value over here. Can you see? Looks very similar to the slide, right? And then you also have access to our slides. You cannot download, but you can always take a photo or whatever. So it's a slideshow. Yeah. And you find, if you go through all this very quickly, you find that, hey, this company is quite interesting, simple to understand. You want to go into detail. Then instead of watching television or Netflix or a movie, right, you can click on the COC. Then our presenter, right, will start presenting. You can see here, this is one of our presenter. His name is called Zen. Yeah, I talk about what the company is all about. And he's able to do that because he's done all the homework for you. He will explain to you the numbers fundamentals as well as the valuation. Yeah, so for example, this Morningstar's valuation, this is a Google Focus valuation. So all this thing is done for you, right? Right at your fingertip. Yeah. So which means that if you become a member today, not only moving forward, you have access to 24 companies, you have immediate access to our existing database right now, which consists of 72 companies. Yeah, and 74%, which is 3/4, are still undervalued today. Yeah, you have all the features that we have, the summary report, the slideshow, the directory. And then the best part is every time when we upload a new company, we will drop you a message to remind you, hey, one company has been uploaded. Yeah, so just to let you know that in the whole Singapore, we are the only one that's providing this services. Yeah, services. So let's do a quick summary. 24 companies done for you, moving forward. Yeah. We will meet at the end of every quarter, and then I'll share with you some of the CFOS option selling opportunities. Yeah, whole Singapore, we are the only one that is doing this. And then you have a summary, you have the slideshows, you have access to anything that requires out of analysis of a company. Wow, amazing, huh? Yeah. So just to let you know that if I add 1 year of value, I estimated the value is about US $16,000. And if you subscribe to any other companies, fees usually is about 100, 200. Yeah. And if I look at our subscription, right, it used to be $136 per month, which is $1,776 per year. But because of this investify symposium, we want you to have access to our database very quickly so that you can take advantage of year 2024. Yeah, we are going to give you a 50% discount. Yeah, so the fees instead of 1,000 plus is going to be US 816 per year. Yeah, so I let my colleague post in the chat the link to subscribe, right? Yeah, and you save $1,000 of school fees. Yeah, and if last time you ever lose money before, right, I think this is a very a small investment. Yeah, so I just, okay, so if you look at the chat right now, you can see, right? Yeah. Check right now. Okay, so there is in the chat, you can see US case study go. This is the one I'm talking about. There's the second one, I'll talk about it later on. Yeah, and then from second year onwards, if you continue to renew, there's a further 17% discount. So we are the only one that they give more and more discount as the years go by, because we want to reward you, right, for your so-called loyalty to the things that we are doing. Yeah, so remember today's bonus, right? 78 companies, 71% are still undervalued. Okay, let me see. So let me just share with you some real-life testimonials so that you know that whatever I'm sharing are beneficial to you. So Andre is actually one of the grads. She's one very hardworking value investor that graduated from Value Investing Academy. So in one of her message to, in our WhatsApp closed group, she said that this is a very good start, as in this US case study. She's from batch September 23, which is a couple of months ago. She has subscribed to US Go. She took the list, but of course she did her due diligence, right? She read a bit more, watch a CFOS video, but she say whack, very funny, huh? Seput, right? Yeah, then of course, so far she already made 5K premium, yeah, which is US dollars, already covered the course fee and then covered the US case study subscription. Okay, a second case study subscriber, right? His name is called Jin Ting. He signed up for US case study September as well. Well worth it, like Andre, he referring to Andre, make back the course fees of value investing program. And just last week, make back the course fee of our advanced class. And of course, that will definitely pay off the subscription as well. So that's for Jin Ting. And not only that, Aaron, US case study was really useful, helps to provide that framework, very important, the system, right? Yeah, to do my own assessment after the firm. I got in after the 4 days course. Yeah, so positive return already. So these are just some screenshots of the testimonials who are existing subscriber. But most importantly, let's listen to Julie, right? Which again, one of our long-term subscribers. So I let my colleague play a short clip about what Julie has said. And then after that, we're going to come to the lucky draw.
My subscription fee, I get it back within 1 to 2 clicks. Okay, I'm Julie. I'm from VIA Graduate Batch 31 and I work in a healthcare company. The reason why I started to subscribe to the US case studies is because of time. I realized that we need a lot of time in terms of doing the research, the filter, the analysis. Sometimes it's very difficult and very tricky. And it's not just as simple as 1, 2, 3. If we have a team who can actually do a good job in doing all these things and monitoring them, why not? It's less than a proper 10-course dinner or a dinner that me and my friend are going later. It's like or lunch or high tea or whatever. And you have a peace of mind, you know that these are the value companies, and you know that this can be part of your portfolio. US case studies is not just about presenting the 1 to 24 studies, 2 studies a month, and then they will forget about it. If you realize that they actually go back to reanalyze some of the case studies that they have picked up before, and then review again, is the fundamentals still there? Are they still earning? Do they still have good management? What have they done for the past year? Have they met the criteria or the promise that they say that they're going to meet? Now that I've found out this value investing part can be part of my portfolio, right? Let's say 25%. I have the other 75% that I need to look into. But I know value investing is important. It's the fundamental, it's the base, right? But once I found out this time that I don't need to do or search the world, for the companies, which I know that a very dedicated and very good team will do that, I can actually use my time for other things. Other than venturing into other types of instruments and investing, I also have more time for my family. I do not want to sit there and search for things, rather than sitting down and looking at, what is the company to invest tonight. ROI that I gain from value investing and plus CFOS and the US case studies is about 15 to 20% per year. and it's like 1 to 2% per month. After subscribing to the US case studies, it's very structured. You know these are the companies that has been picked up and searched and researched and analyzed by a dedicated team with all the knowledge that they have to make sure that it's really a value company. So after that, it took me only about like maybe half an hour to 1 hour. So these are all the benefits that I have because I don't have to worry. It's like a peace of mind. I don't have to worry about is the company good or not. I know that the US case studies, all the company will be value company. But whether I want to invest in them because it's value company is my due diligence.
Okay. Yeah, so I only have a couple of slides and then that's all, just 2 more slides, and then we are going to have a lucky draw. So again, fast forward, if you become a member of our US case study, yeah, you have access to all the work we have done for the past 3.5 years. Remember, right, if you are going to do it on your own, maybe you need to spend 10 years. Yeah, so we save you at least a decade of your life, yeah, by having access today. Yeah, and then moving forward, you will stay with us because every quarter we're going to meet. Yeah, which I've said. And you also got to chit-chat with our author. End of every quarter or online, and I'll share with you how to sell options. Yeah, what I do. Yeah, okay. So this is something that I think out of the whole Singapore, we are the only one that's providing this because we find that in order for us to invest, we face a lot of hurdles. Yeah, so these are the things that we can do to reduce the hurdle for you to kickstart your investing journey as quickly as we can. So again, my colleague has already posted the link. Yeah, so the amount is actually 816. 816. Oh, by the way, just to let you know that it's 816 from now until today, 2359, which means that if you delay and then tomorrow you use the same link, you may notice that it suddenly become a 888, which is why my slides I forgot to amend, right? It's 888. Yeah, so 816 is the discount right now. So again, second year, right, we will further reduce to 735. So it gets cheaper over time. Yeah. So once you have click in, put in all the details and so on, like I say, immediately you receive the username and password. You can just go inside and play around. And then at the same time, you can also download our app. Yeah, our app is called VIA Atlas. VIA Atlas. Yeah, if your Apple phone, you can go to your app store, type VIA Atlas, you can download. You will see a logo that looks something like this. Yeah. If yours is an Android phone, you can go to your Google Play Store. Again, type VIA Atlas. That's the only app. Yeah, so you just download, and then using the password and the user login that I have, you can just log in. Yeah, so you know what's happening? You can invest at your fingertips. Yeah, you don't have to worry about funny things anymore. Okay, it's here, right? Now, again, for those people, if you're interested in both US and Singapore. So remember, 90% of my portfolio on US, 10% is in Singapore. So if you want to be a global investor like Sir John Templeton, you want to invest both in US, a listed company as well as SG, a company, you can always subscribe to our Platinum. Now, Platinum for today, usual is 1318, but we're going to give you a 12.3% discount. It's going to be 1156. So you can see in the chat over there. Yeah. So I just need my colleague to post the Gold as well as the Platinum. Okay. So I'm going to go back to this screen, right, over here. So maybe I just take a few questions before, maybe just 1 minute of question, and then we'll jump straight to a lucky draw. I want to quickly give out the prizes quickly. Yeah, any question, anything they want to ask? Can buy SG case study only? Yeah, so I'll need my colleague to post the SG as well. So for Wei Shin, you just hang on for a few seconds, right? Okay, GTC say I bought SG yesterday. How to add on US? Okay, so for GTC, right, what you need to do is you just need to buy the platinum. You click on the platinum. Yeah, you make all the necessary payment and so on. Then what we'll do, right, we will refund you the amount that we have collected yesterday for the SG case study. Yeah, so that you don't double pay. Okay, so we are very careful about this. Yeah, so don't worry. How about existing US and case study subscriber? Do we enjoy the cheaper rates for renewal? For the US one, the moment you stay for the second year is 735. It's even lower than the discount. So that's for CAF deal. What time will the promotion end? The promotion end today 2359. 2359, that means 11:59 p.m. Trading platform. Are there any payments method for the case study subscription? The only payment method is the credit card. Okay, what else? If we found a potential US company, will you help to advise us? Very, very, very important because you use the word advice, right? Okay, so we cannot advise you. Because we are not licensed. We are not like insurance to give you advice on insurance or whatever. So we are not licensed by MS. So all this case study, we treat it as case study. Yeah. Awesome symposium. Thanks. What else? Right? Hui Ping. Hi there. Do you invest in China companies listed on US stock exchange? Previously I do, but right now I don't. That's to answer Steve. Okay, got it. One-time payment. Yes. I think yes, it's a one-time payment. Okay. SG case study got discount. The link should be in the chat already, huh? Can we do option on those case study? 95% of those case study, right? Of those companies that are found in the case study are optionable. So the answer is yes, 90% of them. What if I already signed for both? Can I still enjoy the platinum package? Siu Hun. The answer is yes. Maybe I'll let my colleague, right, answer you. Yeah, answer you. Yeah. So I suppose the suggestion is today, right? You click on the platinum. Yeah, you fill up. And then give us until tomorrow because my staff later need to go back. Yeah, tomorrow, right, we'll arrange a refund for both the US and case study. So instead of having US and Singapore individually, right, you have the platinum, which is already at the discounted rate. So that is for Siu Hun. Is this inclusive inside the VIP? No, it's not inclusive the VIP. Kath, in this case, I'll wait for your renewal email for subscription. I don't have to sign up again now. I'll let my colleague answer that question. If I'm a current US case study subscriber, subscribe to SG at what price? Yeah, there's quite a number of questions. SG, okay, can you all just look at the chat? So I think in the chat, we will have to put in the SG as well as the US. Yeah, so all my colleagues over here help to reply as much as we can, right? What is the master class about? Okay, I'll come to that. Which platform should we use? Unfortunately, I cannot give you such a direct answer. Yeah, but in Singapore, there's a many platforms, Momo, Tiger, all this. But personally, for my Singapore case, for my Singapore companies, I use Philips Securities. For US, I use TD Ameritrade as well as Interactive Brokers. Can you sign up other time? Yeah, of course, but then no more discount. Okay. Okay, current US subscribe SG, let me see. There is no installment, unfortunately. Yeah, because the online payment gateway doesn't have a installment function. Now, just to let you know that in order to have installment, there must be a credit card machine. And the credit card machine has to be issued by the bank. Yeah, so online payment doesn't have an installment. In this case, I will wait for your renewal email. Maybe I just need my colleague to answer Kath Teo, right? Kath Teo. Because I wanted her to subscribe to a platinum, which is at a discount. Then after that, she don't have to wait for a renewal. We can refund her. Okay, I let one of you reply her, right? Okay, so let me just move on. There's one question about the master class, right? I'll just do that very quickly because I really want to go to the lucky draw. Yeah, lucky draw, right? Now, for those people who are not our graduates, just to let you know that there's no other way out to learn more about investing, but to learn about investing. Yeah. So just to let you know that we have two upcoming masterclass, one on the 31st Jan, one on the 6th Jan. This is a physical on-site masterclass. Yeah, learning is best when it's done face-to-face. Yeah. And since it's on-site, seats are always limited, constrained by the size of the room. Yep. So once you register, later on, my colleague will post the link for the masterclass later on, right? Once you register and you appear, we'll pass you a hard copy on how to invest in S&P 500. And then during the 3-hour masterclass, to answer one of the many questions, you will learn how to generate 3 sources of income, even if you know nothing about investing. You'll invest with minimal capital. You will learn that method, right, which is CFOS, cash flow option strategy, to generate a cash flow on a weekly basis or monthly basis for the rest of your life. And at the end of the masterclass, because you set aside your precious time to invest, we will pass you a hard copy of our latest book called Value Investing Simplified. It's a very simple book to read about value investing. And then we also pass you a $10 Starbucks gift card. Yeah. And this book's forward is written by Miss Laura Temperton, who is our keynote speaker for today. And she said that I highly recommend Cadence Chang's book and his investment courses to anyone who are interested in getting started on investing. And if you bring any one of your friend will also receive a copy of our book, $10 Starbucks gift card, and you yourself who make an effort to bring a friend, you will further receive $20 of NTUC vouchers, as well as $20 Golden Village movie tickets voucher. Okay, huh? So maybe I just need my colleague to post the masterclass link. Oh, so they are very busy to post different links, right? Yeah. Okay, so this is for the masterclass. Let's chill for a couple of seconds before we do the lucky draw. So this is the summary. And we're going to have the lucky draw pretty soon. Okay, so just hang on there for a short while. Any question? Maybe I'll just take 3 or 4 questions first, and then we'll jump straight to a lucky draw. I want to give away prizes. I don't want to keep the prizes. If I'm a current US subscriber, subscribe to USG at what price? There's a Lily Tan, right? So for Lily, you'll be good to subscribe to the, you know there's a platinum link. Yeah, you can subscribe to a platinum link. Then what we'll do is, we'll do a partial refund of your existing subscription. Yeah, for example, let's say you have been our US case study subscriber for 6 months. 6 months. So in other words, you only consume like 6 months of the access. Then what you do is, once you become a platinum today, right, we'll refund you the other half because you haven't consumed, right? Wishing, there's too detailed for this course. Yeah, no time for me to elaborate. You can always attend a masterclass to know more. How much is the CFOS? We do not run classes on CFOS alone, unfortunately. Natalie, sorry, can I have the event exclusive link again? I miss it just now. Natalie, I suppose it's the masterclass. The link is already there. What's the masterclass about? Answer that question. Will you teach us how to do option on those case study? I will share a bit, but details will be a bit difficult. So you will be good that if you know how to already sell options. But if not, right, it still be useful for you. Okay, I'll just take maybe 2 more questions. Okay, so for Lily, again, you click on the platinum, right? Platinum, because if you subscribe to SG alone, you add these 2 amount, right? The amount will be larger. Yeah, so you do the platinum. Whatever time that's left for US case study subscription, we will refund you back. Yeah, that will help you save money. Okay, any more question before lucky draw? I just signed up trying to register my account, but doesn't seem to register, from Nelson. This one I'll let my colleague answer you, because we got 3 of my colleagues here. The technical team has been here. Okay, Nelson, just wait. Somebody will reply you, right? Yeah. Okay, so the team is helping to reply. Okay, any other final question before we go to the lucky draw? Yeah, maybe let's do a quick recap of what's the lucky draw first. Yeah. Yeah, so Joshua, just get ready, right? Yeah. So just to let you know that we have 3 prizes to be given away. The third prize is $100 NTUC voucher. $100 you can really buy a lot of things, especially for the Chinese New Year goodie, right? And then plus a copy of Investing the Templeton Way book. Yeah, by the way, you can never buy this book. Why? Because it has been autographed by Laura Templeton. Now, just to let you know that Laura Templeton came to Singapore in 2018, so actually we got her to sign a lot of copies. So you're going to have a physical copy with her signature, and of course, she'll sign off 2018. And all this is sponsored by VIA, and the total worth is $150. So that's the third prize. While some of you are clicking on the link, joining a case study, masterclass, and so on. Now, the second prize is we want to be wealthy, right? And healthy. So which is why the second prize, we're going to give away Fitbit Charge Model 5. Yeah. Plus, again, an autographed copy of Investing the Templeton Way. Yeah. Proudly sponsored by us, $250. Okay, so the second prize. And the third prize, just now I talked about a case study. Yeah, our first prize is to have access to our case study, but it's a silver subscription. Yeah, the one that you are signing up is actually the gold one, which has more case study. The silver one is you have like half of the number that we have. Okay, so it's the first prize. And of course, to have access all this, don't worry, we'll reach out to you. Now, so let's do a quick recap of how the lucky draw works. Later on, my colleague, right? Yeah, when I say like start the lucky draw, you see some emails running. We use some software to do this. And then, you stop at a certain email address. So what is going to happen is one of my staff is going to email to you tomorrow. Yeah, tomorrow. And our email, right, ends with mindkinesis.com. This is very important because right now a lot of scams. Yeah, so mindkinesis.com. So in other words, if you are the winner and then your email, and then we want to reach out to you and then receive an email from mindkinesis.com, right? That means it's legit. Very important, mindkinesis.com. I mean, you can always go to our website, www.mindkinesis.com. Okay, so this you know that it's legit, right? So my staff from mindkinesis.com is going to email you and reach out to you. Yeah, and then you have to physically come and take the present. We cannot deliver to you because you also don't know where you're staying. Okay, I got it. Okay. Finally, lucky draw. Yeah, so remember, right? Right now we're talking about third prize first. So before my colleague press the, trigger off the lucky draw, let me see what's the third prize again. So many prizes until I've forgotten. Wait, hang on. What's the third? Okay, the third prize is excuse me. A quick recap. Third prize is $100 Sing dollars, NTUC voucher, plus an autographed copy of Investing the Templeton Way, and it's written by Lauren Templeton. Okay, so let's put the lucky draw up again. Wow, this is whether we win or don't win, we still start a good year, right? Okay, so ready? Lucky draw number 3. Come, let's put to a draw. Ding, 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 ding. Now, the winner for the third prize for this $100 NTUC voucher is Dennis, and your email starts with SIN, something, at something. So I just want to make sure that my colleague has taken a photo of this. Okay, good. So the second prize is that Fitbit exercise watch. So get ready, right? Okay, round 2 for lucky draw, please. Wow, congratulations, Zhen Hui. So the second prize goes to Zhen Hui with the email of co something.something@something. Okay, second prize. Whew. So let's start with the first prize, which is access to our silver subscription, which is worth about $500. Ready? 1, 2, and 3. close to Swat Ying. This one looks like our graduate. I remember this name. It's quite unique. So it's a Swat Ying with an email of KSY, something at something. Okay, so I let my colleague, okay, all done. So we have taken screenshots of who are the winners. Yeah, so let me see. I have no more slides already. Let me see. Let me just put on to the last one over here. By the way, before I end our investify symposium, just to let you know that an event which appears to be simple like this took us 6 months of planning because it's quite difficult to put people like, for example, Liu Feng, Vincent, Ernie, and most importantly, right, the 3 American speakers in place on the same date. And then they all function at different time. For example, the Robert, right, his time is mountain time. Yeah, at first I thought US there's only one time, which is the mountain time. Laura is central time. And then Todd is a Pacific time. And just now you realize that Todd has trouble fiddling with his PC. So a lot of things can happen. And in this room over here, you may not be able to see. So in our studio over here, we have a total of 5 people. I'm the one talking. And then we have 4 members who is managing all the, the nitty-gritty things. So on first day, you have heard Robert being the opening speaker for multiple streams of income, and then Ernie talked about property, Liu Feng talked about one Singapore company called SUTI Enterprise, Vincent talked about the importance of having a portfolio. And today, of course, you heard about Lauren, Dr. Todd. I'm really thankful that there's no way I could express my thanks for both Robert, Lauren Templeton, as well as other speakers. So I shared with you one company that invested, it's called Pauti Group, PHM. I bought it at about 40 plus. Right now it's a 100 plus. 100 plus, even though it has risen up by more than, I think, maybe 120 plus percent, the company is at fair value. And any higher will be overvalued. I would have give this company a miss. Yeah. So for today's sharing, I think it's important for me to share something that I felt is good, fair value or undervalued. Yeah. So with that, maybe I can spend the next 1 minute taking any questions. If not, we're going to mark the end of Investify a symposium. Yeah. Janet Law, right? How to pay for access to the replay. So I just need my colleague help. Fraser, thanks. Yeah, investing it requires understanding. I wish making money is as simple as watching a 5-minute YouTube video. I wish, everybody wish. Yeah, because if it's so simple, then, there are no poor people in this world. So there must be some intricacy somewhere. So usually influencer, right, wouldn't want to tell you the intricacy. They always make things like very easy, like that, just follow me, can already. Yeah, I wish life is so simple. Okay, I'll just take the last few questions. Wonderful, fruitful sharing. Thank you, John. Appreciate it very much. Effort. Have learned a lot. Thank you, John. Thank you. Ivan, thanks for organizing. Looking forward to the next one. Next one. Ivan, next one. Oh my goodness, I will spend another next 6 months. It's okay. Yeah, I'm just kidding. Thank you so much. Sandy asked, right? I would like to buy the subscription for my daughter. So do I put her email address or my email address? Yeah. So Sandy, I think what you can do is you can put your email address because the credit card is yours, right? Yeah. Yeah. Then after that, you have the username, password. You just pass it to your daughter. Yeah, that would be good. Then your daughter can share the subscription. You know what I mean? Really, just to say thank you. Wow, very nice. Wow, this is wow, I can see all the thank you message coming in. Wow, thank you. This is Sensei, thanks. Sometimes by reading all this, you feel great consolation. And somebody wrote a very long one. Thank you, Lily, Huan Xiong, Fraser, Jaren. Jaren said, is it okay to be late for master class? Late, depending on how late. I mean, if it's 5, 10 minutes, 10, 20 minutes, I think it's still okay. But if it's an hour, then maybe you want to attend the next day. Okay, let me see anything else. Full session. Okay, I think that's all. Yeah, Stella, thank you. Okay, so let me just end on a good note with a special thanks to all the speakers. Special thanks to all our internal colleagues who have spent a lot of effort. It has been pretty stressful for them, especially for those people in charge of distributing this Investify symposium to our mailers. We want to reach out to you, hey, asking you to attend the class, which is very important, and also to our producer, Sun, who has also suffered a bit because his staff is no longer around and is doing all these technical things alone. And yeah, I just want to wish all of you a good year ahead. I wish all of you health, very important, and then I wish all of you wealth in this 2024. So I shall see you soon in our next Investify Symposium if we are organizing one more. If not, will be our US case study subscription, inner circle meeting, or our upcoming masterclass. Thank you all, and I shall see you soon. Goodbye.
don't just spend so much time of your life to work for someone else.
My name is Desmond. These 4 days I joined the VIA course together with my wife.
My name is Hazel. I'm currently 28 years old and I work for a healthcare company.
I wanted to get out of rat race and then creating more passive income for myself so that I have more time to accompany my parents, my baby, and also especially my wife also.
What motivates me to invest is that knowing that I can achieve financial freedom at a very relatively early age, that I don't need to work, but I can choose whether I need to work.
Favorite part of the course is that trade show where Caden did up actual market game. We actually really go through the ups and downs, have our emotional roller coaster throughout the journey, and then felt like, how is it?
My favorite part of this course is definitely Caden. I really appreciate the efforts that he has put in his course, make it really enjoyable, humorous, and make a very complex subject in a bite size and make it easier for us to understand and relatable to us. The most helpful lesson is knowing that I don't need a lot of capital to start investing. With a very minimal capital, I can also buy good company. That is a very big assurance for myself. And how safe the method that Caden actually taught us is also very assuring.
This is one of the courses that we definitely recommend our friend to take up.
We have actually recommended Caden's course to my friends after the first day of the course itself. Some of them are queuing up for the next batch. Yeah.
Hi, I'm Mel Wadwa and this is my husband.
I'm CJ Wadwa and we are running a food business. One of the things which attracted us to the program was to learn more about investing.
And we want to also learn how to make the money that we work so hard to earn grow. For me, the favorite part is knowing how to study a company and how to be strategic about choosing your stocks. And it's not just going out in the dark, but you're putting in time investment in learning more about the company, about the business before you actually buy into the business.
For me, I think the most attractive part was understanding that investing is not speculating. When you look at certain stocks, you are looking at not just a share price, but you are understanding what that business is all about before you go and put in your hard-earned money to these businesses. For me, the most helpful lesson is trying to understand how to find out the intrinsic value of a share price.
And for me, the access to websites such as Guru Focus and also the Value Investing Academy's own calculators that's ready for us to just key in the basic information to come up with the intrinsic value. I think that's very invaluable and very useful, especially novices like us.
I would convince them by telling them to go to the masterclass of VIA and understanding that investing is an important part of growing.
And also to beat inflation and rising costs, because that's very, very important.
I'm Subhashri. By profession, I'm a scientist. I come from a research background. I come from a complete no investing background. So the motivation is to have an earlier retirement and to have for my children's education and to be financially free. I think that's the motivation. I think the favorite part I would say is actually the genuine nitty in Caden, because I did a little bit of searching for other many investment gurus or so-called, but Caden's story is also very relatable and I feel it's very genuine. And as a trainer, he's a very, very good trainer. So he makes it interactive. He makes the difficult, complex ideas simple to understand, and he really holds your hand. It's like a hand holding for through the investment journey, and that is what I found was very, very beneficial. I think most helpful lesson is the fact that everyone's journey is on their own, and what Kaden said is also very, very it struck me quite hard, saying that investing journey is different from like gambling or like trading. So you need to make your knowledge or your understanding of about you need to have a groundwork done well. So rather than following someone blindly, you need to do and for that homework to be done, he sets the ground really well, because now a lot of things which I did not understand even 1 month back, those concepts are very clear in my mind, and that gives a good platform to start your work from. This VIA course is very, very useful for someone who is just beginning their investing journey. So yeah, I would definitely recommend.
My name is Daphne. I'm 36 this year and I work in the financial industry. I've previously done investing before, but it wasn't as methodical with a system and process in place. So I think I was just blindly hitting. Yeah, so I decided to go for this VIA course to improve my knowledge, enhance whatever that I've known before, and do better, hopefully. What attracted me to join in the first place was the cash option flow strategy. But I would say that overall the course has been very insightful. It sort of reinforced the knowledge that I had initially, allowed me to go more in depth and analyze and make my own deductions better. I think generally for anyone who is kickstarting their investing journey, I think it's good to know something about value investing. For investing, it really does require some knowledge and some effort to identifying the companies that you like to invest in. And I think value investing is reasonably justified because it focuses a lot on what the company does and whether or not it does bring value. And if it does bring value to consumers or the people around them, then it does bring value to you as an investor as well. At the same time, it's not about buying and selling stocks, right? It's about finding a good one and keeping it in the long run, and then it brings value back to you. So as someone who's from the financial industry, this is also something that we advocate. So it aligns with my values and my mindset and my thinking towards investing.
My name is Celine and I'm a corporate lawyer. To achieve financial freedom, free up my time to do the things that I love. I hope to learn how to be an intelligent investor, how to pick good businesses to invest in, and I want to sleep well at night. So I want to make good decisions rather than just rely on stock tips, but to really understand the company that I'm investing into, and hopefully over time to really grow my nest egg for retirement. Previously, I only know how to buy stocks, but now through this course, I learned from Kaden how to also use options and also really understanding how to value the company itself, how to evaluate all the different formulas, the different financial statements to look into. So I think previously I may rely just on Google to find out more information about a company. I may look at the stock price over the years. But now I actually understand that it's important to look into so many different aspects of how the business is run, what are the competitive advantages of the business, the future of the business, what are the prospects. So I think with that, I feel more confident in my investments. There are many things that I really like about this course, but I would say the highlight will be today's trade show. Other than the things that I learned personally from the research of the company that my group picked, I felt that I learned a lot from my teammates, the coaches, and they gave us feedback, pointed out different things, maybe say blind spots that I didn't realize earlier. And also, I feel that the community is very helpful because I have other teammates who are from other industries in their work. They can share, they can contribute about the different sectors, the businesses, give different insights. I really feel I benefited from learning from all these friends from the course. I have to say that personally, I didn't really understand much about this portfolio, how to really come up with it. I found it very interesting, the tool that was used. All we need to do is answer a few questions like what is our risk appetite, how much capital we have, and then out pops this pie chart. It's automatically generated to tell me how I should allocate my assets. So I think I'm more conscious now about have a safer portfolio, not put all my money into shares, but also put into more stable, perhaps lower growth, but very secure forms of investment like bonds. For friends who do not understand about investments, I would definitely invite them, encourage them to attend Cadence course, because I think it's really important. I believe in lifelong learning, and over time, it's important to really always improve your skills. And Cadence goes through step by step, screenshot by screenshot, showing you how to navigate through. It's really an investment course for dummies. Anyone who doesn't have any background information, background knowledge about investments can join and learn a lot. And I think the best thing is Cadence knows how to explain difficult principles in an easy way and tell stories and draw analogies that make it fun and interactive and interesting.
I'm able to generate enough money to cover some of my day-to-day living expenses and also some of my transport expenses. Hi everyone, I'm Hao Cheng, 23 this year, and I'm an undergraduate studying political science in NUS. So before VIA, the only investing which I do basically just I just put a lump sum of money into robo-advisors. It's very scary to start investing just like that. There's no way to guide you. I always knew I need to invest. It's always been at the back of my mind, but in the past I didn't know where to find the resources to learn about investing. So initially I was quite skeptical because the investment industry, there's a lot of scams. But once I attended the masterclass, once Cadence introduced the concept of value investing, it really clicked for me. I find it to be really logical, and I can also feel like Cadence wants to imbibe the knowledge to you. My main goal is just to generate enough income from investment whereby I can be able to not worry about my finances and do things which are meaningful to me. And also inflation is also quite high right now, so it's better to invest to keep up with inflation. So I enrolled in VIA in late March this year. Basically the most valuable lesson I learned was how to evaluate what is a good business and what is a bad business. Looking at the annual reports, etc. It really helped a lot. It gives me peace of mind that I'm investing in good companies, good businesses. Once I start seeing stocks as being part of a business rather than just a ticker symbol over there, it really changed my mindset. Now I know that being a stock owner is being part owner of a business. This is something which I find to be very logical. So using the cash flow option strategy which Cadence taught us, I'm able to generate enough money to cover some of the expenses, some of my day-to-day living expenses and also some of my transport expenses. So as for the money which I use for investing, most of it comes from the part-time jobs which I do. Part-time usher at the University Cultural Centre, but the pay is $12 per hour. And also from my NS, the savings from my NS time. Basically for my part-time job, I try to put 60% of the money I earn into investments. So during the program, Cadence taught us how to build a well-rounded portfolio. So basically my portfolio consists of around 60% in stocks, 20% in ETFs and 20% in cash. So the reason why most of it is concentrated in stocks is because right now, because I'm a student, I have more time to evaluate and search for good companies to invest in. And moreover, my time horizon is also much more longer. So it's important to build a well-rounded portfolio so that if the market is not doing well, then there may be some of your assets which are still able to pull up your portfolio. For example, during a bear market, although stocks may not be doing so well, bonds may help to prop up your portfolio. So my tips for those who want to start investing is to join this VIA program, because it's very difficult and almost impossible for you to learn investing through just online means alone.
To my shocking, pleasant surprise, I consistently make about $2,000 per month income. Hello everyone, my name is Jessie. I'm 35 years old this year. I'm a business owner. I have been investing specifically in the stock market for about a year now, ever since I started learning from Caden. Before I get to know VIA, stock investing is something that I would not even touch. Looking at the chart, up, down, up, down, up, down, my feeling tells me that losing money is easier in the stock market. Before even I go into stock investing, I am already in a property investment. Something that I feel very stable, something that I feel it's an asset class that I can feel and touch in Singapore. It actually gave me a lot of wealth. And stock is a paper asset that I never thought it would also generate quite a good income. The misconception of being risky, the misconception of it's out of reach, the misconception of 100% lose money didn't happen to me ever since I learned from Caden. One of the VIA graduates who did very successfully, make a lot of money, he shared with me about VIA. And I wasn't convinced initially because I thought stock market must be something very risky, something that I do not want to burn my hard-earned money into. One day, I was telling him that I want to make multiple incomes outside from my norm, and he shared that, hey, why don't you try this? With the trust I have for him, I went ahead, and to my shocking, pleasant surprise, Caden opened up a whole new world for me that I created a very decent income just from stock investing. So once I decided that I want to learn something new outside my comfort zone, I enrolled myself into VIA back in November 2021. I take action immediately comes December, January, and thereafter. Every single month, I consistently generate about 2,000 USD per month, and it only takes me about 5 to 10 minutes a month. That's the biggest lessons that I learned from Caden, that I don't need to spend 9 to 5 to make that full-time pay. What do I think about value investing methodology? I think it covers the fundamental. It ensures that the company you're investing in does make money. And I was guided to look at the cash flow, look at the management, and most importantly, is the company making a profit? And also, is the company business still relevant in the market? By knowing the methodology to ensure that the fundamental is being covered, I am sure that the stock that I buy would not lose money. So one of the most important lessons that I learned in VIA is about portfolio allocations. As we are taught, you do not put all the eggs in the same basket. So for me, personally, I set aside about 20% of the cash, and the rest of the 10%, I would actually diversify across different industries. So it keeps me safe, it keeps me more predictable, and it ensures that I sleep well at night, every single night. Why VIA? I did not really went around to search what is other availability, but the strength of the community and the strength of people referring another people who really made it, really give me the kind of sense of successful. The friend of mine who referred me to VIA was kind enough to sit next to me and guided me step by step. It was a very smooth transition and the starting of my new investment journey. As a business owner myself, I have to manage staff. There's a lot of A to Z matters that I have to handle, I have to take care. How investing actually opened up a whole new world is that I don't have to look for customers, I don't have to take care of staff, I don't have to look at all the nitty-gritty things, and all I do is just click a button, 5 minutes a month, go to sleep, wake up, rinse and repeat. And that's what investing actually opens up a whole new world for me. I started since December 2021. So let me exclude December. If I start things proper from the whole year of 2022, January to December, the year where the whole market dropped 60-70%. And the good news is, I consistently make about $2,000 per month income. And in total, I make about $24,000 for that particular year. To me, it's an amazing, amazing result. I do make good and bad decisions along the way. However, in totality, I still make money. My retirement plan is that in 10 years' time, My youngest daughter will be 17 years old, and all of them should be studying somewhere. If they're in Singapore, they should stay in a student hostel or stay outside. My husband and I would not own a house here, would not live in Singapore. We don't have a car, we don't have a house. We are going to travel around the world. Maybe 3 months in each country, 4 months in each country, and go anywhere we wish. And this particular investing methodology would serve us well wherever we are. And this is something interesting. So it fits into our retirement plan perfectly. Tips for all the viewers. I think you need to take actions and to start learning from the right teachers, from the right practitioners who have been there, done that. Be open and you will find a pleasant surprise, a whole new world that's waiting for you.
Right now, I'm earning an average of Sing dollars 7,000 per month from CFOS alone. My name is Hyung Ming. I'm working in the IT industry, doing strategic partnerships. My goal in investing is because I want to get away from the corporate kind of life, whereby I have to work from 9 to 5. I actually need a more flexible life timing. Because of my current family situation, I also need to take care of my mother. She actually has dementia, so I need to also spend more time with her. So I think a typical job might be hard to maintain as time goes by. So at least this income eases some of these worries from my mind. Value investing has really changed my life since I've gotten this steady stream of income, which has actually replaced my monthly income. I really feel very liberated. Now I no longer need to work because I need to earn money, but I am working just because I enjoy what I'm doing. I can leave anytime and do something else, like which I'm also thinking about, like doing some volunteer work, or even taking a break to do some further studies, like going for MBA. Even though I still lead a very simple lifestyle, but now at least if I want to indulge in anything, like buy a nice pair of shoes, get some nice clothes, go for a meal at a very good restaurant, I will just do that without a second thought. I will just indulge for myself and my family, because I think life's short. You got to make the most of your life. Before VIA, I actually did not know how to make my money work for me. I save a lot. By the end of the day, all my money was actually in the bank collecting 0.5% interest annually. At the rate this is going, I probably will not have enough money for myself when I retire. And I was probably going to be stuck in my day-end job, for the next 40 years or so. I tried to find many ways to make money. I think I spent, in fact, more than a decade just trying out different stuff. So I went from buying Singapore stocks and IPO from Hearsay to MLM to buying overseas properties to even day trading. I actually went for proper courses for all of them. To me, in the end, the result was quite bad. I didn't really make much money. I spent a lot of time though, not much money though. It wasn't quite worth it. For example, when I was doing the day trading, I was actually spending nights up just monitoring the charts. And it was actually quite stressful, so looking at the price fluctuate up and down. I found that in the end it defeats the purpose. I actually wanted passive income and I wanted to spend very minimal time to make money. I was spending more time on my so-called side hustle to make money than in my proper job. I found about VIA from a friend when she mentioned that she was making small but consistent returns monthly. So that got me interested because I was also looking to find a way to make some passive income. I enrolled in batch 56 last year in February. I decided to enroll after I went for Cadence Value Investing Masterclass, as I felt that it was a very sound strategy. It's actually a methodology that's been around for a century, so I knew that it was not a get-rich-quick scheme. I got back my course fee within 5 months after I attended Cadence Value Investing program. I like the fact that you can collect profits monthly through the CFOS, or what is known as the cash flow option strategy, and do not have to wait for a few months to see your money coming in. Right now, I'm earning an average of Sing dollars 7,000 per month from CFOS alone. My capital right now is about 150K. I started off with about 5,000, just to test the water because I wasn't very sure. So I think I did that for a couple of months. Then I found that, not bad, I'm getting 2 to 5% kind of returns. But then I felt like my confidence went up. Then I decided, okay, I should put a bit more money. So I started putting about 20K and then 50K, slowly and gradually. All this money I actually got from, actually I kind of liquidated some of my unprofitable investments. A fair part of it came from my savings because I'm really a saver. So that's how I acquired my capital. As of now, the earnings I made from the value investing way is about USD 97K. This includes capital gain, CFOS, and dividends. I think value investing methodology is, to me, quite low risk because you do your groundwork to actually find out about the fundamentals of the company. You also find out what is their mode and their future plans, and then you properly find out what you feel is the value of the company before you invest in it. So to me, with all this in place, I'm pretty assured that when I put my money into these assets, it's actually going to give me returns, and like the company is not going to go bankrupt the next day. We also taught risk management as well. So I feel quite assured, and I sleep quite soundly at night about when I do this. If you are new to investing, definitely the first thing you should do is to get enough capital, because without capital you can't do much. So I think important to save money. Once you have a certain amount of capital, actually it need not be a lot for a start as well. I mean, I think any amount will also do, even $300, $1,000 also good. You can start with, I think, investing in S&P 500. I think that one is proven over the years that it does give you a pretty good gain of, I think, about close to 10% per year. But of course, at the end of the day, in order to generate a steady stream of income and to really make your money work for you, I will still recommend that you join Caden's Value Investing Masterclass to learn the proper techniques and understand the methodology in order to really make a good investment.
大家好，我是燕燕。我从小生长在一个富裕的环境，所以从小无忧无虑。我也不知道什么叫做理财，我也觉得我不需要去做一些什么理财。可是当我长大念完书，大学毕业之後，我發現我沒有目標，那我只能去上班，而且呢，我只能把錢存在銀行裡面。
大学を出てからずっとサラリーマンをやってました。もうサラリーマン一本ですね、収入源が一つしかないということで、定年を間近に控え、このままでは將來に不安があるということで投資にはいろいろ手を出しました。
我就係一個普通嘅大學生嘅。當我畢業之後，我就發覺我係需要一個投資嘅計劃啦，去好好咁樣去處理我嘅人生同埋我嘅理財計劃嘅。
那後來呢，當我遇到了結婚對象，我的對象他是學財經的，而且他在銀行上班。我想說，哇，我的人生有希望了。於是我把我的積蓄通通交給他，讓他去做理財，去做投資。可是沒有想到過了幾年之後，我發現他做的是投機而不是投資，於是我們的積蓄都沒有了。又加上呢2個女兒的出生，我從一個本來很富裕的生活變成了月光族，也就是每個月薪水花光光。
バイナリーオプションであるとか FX であるとか、日々値段を追ってもう徹夜したこともありますけど、ほとんど変わらないというか儲からない。もうほとほと疲れて、もうどうしよう、もう投資はダメかなと思った時に出会ったのが株式投資でした。で、株式投資でもいろいろやり方があると思うんですけど、長期的なやり方があるということで、それにすごい興味を惹かれました。
所以咧，我就特登去參加咗 Kaden 老師嗰個嘅VIA 嘅 course。咁我投資之前就真係完全係冇接觸過任何投資嘅，最多都只係喺大學度有上過關於可能係 finance 啊，又或者 account 嘅知識嘅啫。咁就完全冇投資嗰方面嘅任何知識。咁所以我就最後尾決定咗去試下 Kaden 老師個嘅 course， 咁然之後睇下會唔會對我嘅生活有啲咩嘅改變咯。
我每天過着這樣的生活，我真的看不到未來。但是呢，在去年我接觸了價值投資之後，我發現原來可以透過學習，讓我們自己翻轉自己的未來，讓我們有機會可以獲得財務自由。
バリュー投資という、長期的な投資をやることによって日々株価を追わなくていい、ゆったりした気分で、長期的に見ていくということで、 またリスクを抑えてやるというところで、年も年なんでリスクっていうのはやっぱり避けたいというところもあるんで、そういったのもうまく、自分の希望も叶えられる投資というので、それを実践して、やっているんで、結構ゆったりと精神的にもゆったりとした気持ちで、取り組んでおります。
我今年已经52岁了，而且我有2个女儿，我现在也是单亲。我相信我可以做得到，你还有什么做不到的呢？那讓我們一起加油學習吧。
我本身係冇任何嘅投資嘅知識，亦都冇任何投資嘅經驗，我亦都冇咁多嘅時間可以做其他嘅 part time 同埋 freelance。咁呢啲嘅因素都冇影響到我去學習投資。咁你依家仲喺度等啲咩啊？
我在 VIA 學習投資。
私は VIA の卒業生です。
我係從 VIA 嚟嘅。
私はケイデンのクラス卒業生です。
我是從 VIA 學習的。
咁你呢？
那你呢？
那你呢？
I've lost a bit of money over the last.
To see the different team members get together, and there's a lot of questions and answers among us, like the debate why we should pick this company versus this company. So you will see that different people have different way of gauging, right? Even though we have the Sega funnel, but at the end of the day, it really comes down to how much you know about the industry, right? And there's always other perspectives out there, and it's important to keep an open mind. It's a no-brainer. You have to make sure that you have contingencies from your day job. I chose a very risky path of building companies, tech sector. That's why I think all the more we should always have another stream of income. Teach yourself a very useful knowledge that could replace your income, even if anything happens to you, your job, or your company.
Hi, I'm Gareth. I'm a software engineer. I decided to learn investing really because I wanted my money to start working for me, and ideally I want to start creating a cash flow from my investment so I can live off the income and retire a bit earlier. I've been in Singapore for about a year now, and I've been looking at various different training opportunities, doing a lot of online training as well, but nothing was really working, so I started doing Google searches, found out about VIA, and it kind of like fitted what I was looking for, so I signed up, went to the masterclass, signed up, and here I am now. My favourite part of it has been actually able to meet the community and meet other people that are actually doing the same thing and interested in the same thing that I'm doing, and starting to build the network and finding out what the different kind of techniques I should be looking at to improve my knowledge in investing. Don't lose money. I've lost a bit of money over the last year, so I think that's the most helpful one.
So the VIA program will help us generate income after retirement. Hi, my name is Hiroshi and I'm a public officer. I learned investing because I want to be financially free, and my goal is to retire and be financially secure. I found out VIA from my campmate, and I was looking at him checking out stocks. So I asked him what he's doing, and he said that he joined a very good program. So I asked him, can he introduce me to the program, and he did. Since then, I've never looked back. My favorite part in VIA is the CFOS. How Caden teaches us is to be very prudent in the way we invest. I like the cautious approach that he's taking to financial stability of our own capital. After listening to him, I realized that it's a strategy that's very good for my personal well-being. So in the VIA training, I really like the step-by-step process called the VIA funnel, where Caden teaches us how to scan and search for good companies to invest in. Yes, I would definitely recommend it because I love my friends and I also want them to be financially free. So that's why I want to introduce this program to them.
My name is Alvin Huang, so I run my own business. I was very interested in investing since young, but I kind of geared towards business and marketing. So I think for now, my business, there are ups and downs. I wanted to grow another income, additional income. So that's why I got back to learning about investing. My favorite part about the VIA program would be the part where Caden really gets down to the basics and practicality of how to really build your portfolio. So I think out there's a lot of theory which you can get a bit confused. So I think Caden really walks through it slowly to make sure that you really get it. I think the most helpful lesson for the program for me would be about the utilizing of options to add another income stream. And of course, that's not buying, trading, but to actually sell options to add this income stream to your portfolio. I would highly recommend VIA to my friends, especially those who don't know any basics, because I think Caden is very good in simplifying difficult concepts into simple ideas, and of course, more importantly, how to practically use them in the market. Even if you don't have any investing background, you start with Caden's program, so you can learn the basics, and I think there's a lot of guidance and community that helps in the learning process.
This is my mom who introduced me to this investing.
Introduce? More like I signed you up.
Before I was introduced to the masterclass, I actually started looking into stocks and things like that. But I didn't know like the terms of what is PE, what is PB, how to buy and sell. So after I attend Caden's masterclass, I thought that it is a good class that will teach me everything else. So my short term will be, of course, additional passive income. Then my long term, of course, will be like financially free and things like that. So yeah.
Well, I am in the stage whereby I was thinking of retiring comfortably and doing something which still yields an income, but yet not selling my time, but letting my money work for me. So that's why I came to his class.
Previously, when I choose stock, it's based on what I hear from other people and what my speculation is. But after through the course, right, Caden actually taught like how to really see a company. How is this company? Is it really a good one or a bad one, or is it really gonna make you money?
And when you want to look into a share, you cannot just look at it and say, I need to make money. But first, I must understand the company. Then I ask myself, can I make money? Instead of the other way around. And it gives me a little bit more confidence in investing.
We will recommend VIA obviously because out of all the stocks videos I found, right, actually Caden's explanation is one of the very simpler and easy to understand.
VIA is a highly recommended course because it's easily understand. Caden is very down to earth. The methods are tested and very simple, and it's very logical. So he actually directed us to look at the more important parts of investment rather than anything else.
I just want to buy a ticket and go anywhere that I want. My name is Marilyn. I'm actually a product owner working in a bank. I love to travel a lot, and of course I don't have to be time bound by the things like I have to take leave, I have to go through the manual process. Basically my time is not my time, right? So I want to achieve financial freedom, and that motivates me in terms of investing. The classes that Caden goes through is very step-by-step, very structured, and he gives opportunity to use the tools and also let us try out in a very well-paced manner. The whole course is being structured in a way that every component kind of paints you the big picture at the end of the day. So you can actually see the big picture and where you are heading towards the end. Yeah, that's where I kind of find it very useful, and it can be very, very practical. You can actually take what you learn and put into action almost like the next day. Based on the trade show, some of the companies that were being shared were quite interesting. It's something that we can bring back, and if required, do a bit more homework, then do the implementation the next day actually. Yes, I would recommend it to my friend.
Okay, I'm Linda and he's Banfai.
I'm Banfai.
I'm semi-retired. He's going to be retired soon. Yeah.
I'm in service industry for semiconductor.
Me too. I'm also in the service line, in an airline. Yeah.
Hopefully to get ourselves ready to earn some passive income before we retire.
The helpful lesson. It's very practical. It's actually a real life situation. So it's no different whether we trade in paper or trade in paper trade. But it's how they simulate the whole process. It's better than learning from books, and in fact from other courses they don't have this type of simulated training also.
Actually, what I like most is the SEGA, the search for the stock, then evaluate the value of the stock, and gauge whether is it over or under value before you act on it and to buy or to not to buy the stock. This part is very informative. In other training, probably they don't have this portion whereby get you how to go do a search and evaluate the stock. That's why I like it. Oh, I think I will use result if I can achieve to show my friend to convince. That's the only way.
Keeping your money in the bank account is just gonna lose its value over time, and you just need to put it to work for your retirement. My name is Pierre. For a few years, I've been interested in putting my money to work, basically. Between financial advisors, between friends and so on, you receive a lot of different advice, and you realize that it's actually very difficult to understand really what's happening, what they're speaking about. So I wanted to come to get, proper kind of education and frame and a methodology to assess really myself where I'm putting my money and to truly put it to work for good. I think it's how Caden guides you through the methodology, explaining you, in detail how to value the company, how to get there, and how to gauge the shares, and then how to build your portfolio to start investing. I think the best lesson is number one, you never lose money. Number two, always do your own due diligence. Don't listen to people around you that might convince you to buy a stock. Just, do your own diligence as you've learned in the class, and that should work out. Yes, I would recommend the program to friends of mine. Yeah.
I'm Michelle. I'm in my late 50s and I'm a consultant helping companies when they will need to do a startup in Singapore. I've tried forex trading in the past and it wasn't successful at all. Then after attending the master class, I just found it very interesting, especially the concept about not losing money. None of us wants to do that, right? Talking about experiences, sharing stories, it's more related and you tend to remember more by listening to the stories than, they tell you, oh, this is what you're supposed to do, and you don't have a clue as to what's going on. The most helpful lesson, I think all of it, but what was nice was learning how to understand about the companies, to find out more about the companies and whether it's really worthwhile in investing, because you may think that it's a good thing, but there are a lot of factors now that I've learned that you need to look at. Oh, definitely. In fact, I have spoken to some of my friends to tell them that if they're going to retire soon, maybe they should think about doing something like that. But I think that the thing to convince them to do such a thing would be maybe watching the video on YouTube and then signing up for the masterclass, because that one was really an eye-opener.
Hi, I'm Diana. I'm actually a financial controller. So much time and is spent on working for the company and not working for myself. And this is my husband, Key. We decided to come for this event is because we think that we need to let our money work harder for us.
That's right.
Before attending the class, I think our investment was very much, I would say, speculating to a large extent. We just go by the flow. When people say, oh, this is a good stock, this is a good company, you should invest because it's growing and then it's doing very well. And that was the information we have.
After the first session, the first two sessions, I felt that we were able to see quickly where we went wrong previously.
After going through this class, we really know that investment or investing in company is a different story. There has to be a process, a good process, good underlying fundamentals that we should look at before investing money. After all, it's a hard-earned money, right? So I think I really appreciate what Kayden has shared with us, how to invest it correctly.
I think it's one of the most eye-opening session for me because I felt that what the steps that I thought are really quite simple, which can be easily executable. You don't have to think too hard. More importantly, I felt that it came across really sincere. I think I benefited a lot from it, not just from learning how to value invest, but getting to interact with Kayden himself. So I thought that was very important. Definitely, I would recommend. In fact, I attended the first two sessions, and then I really did a recommendation to one of my friends. Not for anything, but I think it's a really worthwhile. If you're not even investing, it's a way of looking at things in general. It will add to your value learning for yourself. So I think I would recommend it to anybody. Yeah.
We can't be working forever. This is one sure way or good way to ensure that we can be financially secure. Hi, I'm Joe here. I'm working as a product manager with a private education provider. I learned investing because I want to be financially free. So I wanted to have a source of income that will allow me to reach the financially free goal. What I like about the VIA course is it combines a relevant concepts and also a very practical learning in these 4 days of lessons. It also gives us very practical tips and very easy steps on how to conduct the VIA funnel, and also using that to transit into identifying companies that are worth to look out for further investigation purpose. VIA Academy has given some tools that are very useful in simplifying investing calculations, which I think it can be pretty complex. I would definitely recommend VIP to those who are new to investing and also who needs a community to support their investing journey. Investing should be something that is on everybody's mind because this is one sure way or good way to ensure that we can be financially secure. We can't be working forever. And if this is a goal that is being shared by my friends, I would strongly encourage to consider this point of view.
I only take an hour a month and I can earn more than you.
My name is Derek. I'm 32 years old this year and I'm a graduate student. Brought up in a very traditional mindset that you make your money from a salary. But I think in recent years we have come to see that a simple salary is not enough, and so that's why we start to think of an alternative, and investing is just one of that alternatives. My goal is just to be able to supplement my income. The importance of investing is to give you a larger income that you can then use to do what you want when you want. So I found out about VIA through my mom and my brother. They've actually attended this about a year, I think, before me. At home, I just did what they were doing. I was copying them, but I realized that I need to know what I'm doing, and that's why I'm here. My favorite part is the CFOS because first, not many people know about it, but it's able to generate quite a significant amount of income, and I totally love it. I think the most helpful lesson, there are so many, but I think knowing how to find a good company, that underlies every single investment decision that we will make, regardless of whatever tool we will use. So I think that is the most important lesson. I think the portfolio allocation portion of the course is very, very important because upon being introduced to options and how lucrative it is, some people will be very tempted to go all in into options, but we have to remember that we have to be prepared for emergencies, new opportunities, and having that reinforced to us in the portfolio allocation is a great thing to have. I can tell you how I only take an hour a month and I can earn more than you. I will even be happy to show you my account statement, and I hope that will convince you.
I am not living in a paycheck situation. Hi, my name is Preston. I'm 29 this year. I specialize in commercial real estate. So I joined VIA batch 11 if I'm not wrong. I was only, I guess, 19 years old. So I really had no investing knowledge at all.
10 years later.
So how did investing change my life? I guess I am not living in a paycheck situation because value investing gives me the tools and the knowledge to actually have the ability to generate passive income and also to gain additional income through capital appreciation. My goals is actually pretty straightforward. I just want to live a simple, peaceful life, have the freedom of time to do my personal hobbies without the worries of any financial, concerns. When I was starting the time, my mindset was that I thought that, I'll forever be working 9 to 5 in order to meet my financial goals of retirement next time. VIA provides a roadmap for me to actually attain my financial goals. It's definitely worth to invest because if you don't invest, it's almost like an absolute necessity, especially when we're living in a high inflation rate environment right now. The high inflation is actually eating into your value of your money. So I would say investing is an absolute necessity. So when I started the time, my initial capital was about 3,000 to 5,000 USD. Back then, I was only 19 to 20 years old. I just finished my polytechnic and just about to start with my national service. So to be honest, I didn't have a lot of money and to save up a lot of money from my pocket money for my parents and work part-time job as well. 10 years ago, when I started doing the options, it was only about anywhere between $20 to $50 per month. Was quite little. But of course, over the years, the last 10 years, I reinvested my earnings. I got the dividends as well. And also, naturally, as you progress through life, your work and career, you earn more money. And I put those money that I save into my investments as well. So currently, since last year, I've been earning anywhere between 1,500 to 2,000 per month. And overall, the last 10 years, I have probably invested anywhere between 100 to 120k USD. And currently, my portfolio now is around 250k USD. So why VIA? This is a good question because when I came to the masterclass back then, I find Caden to be very down-to-earth and sincere. He doesn't really flash, material things, not too showy off, That's why I come to prefer Value Investing Academy. My belief is that
You have to start investing in yourself first. You have to equip yourself with the investment knowledge in order to do investments, right? This can be done through attending courses such as the VIA, as well as reading investment books. But then again, I would say studying can only get you so far. At the end of the day, you still have to take that calculated risk by actually taking action, opening the trading account, and of course buying your first stock or selling your first option. So there's this famous phrase which is called, you can't learn how to swim by reading a book on how to swim, right? You have to really jump into the water and then learn how to swim. I also learned from a lot of mistakes that I've done over the last 10 years. I have made money, but I have lost substantial money as well. Losses have actually taught me good lessons on portfolio allocation, going through the VIA funnel properly. Yeah, so this all has actually taught me great lessons in investments.
大家好，我是燕燕。我从小生长在一个富裕的环境，所以从小无忧无虑。我也不知道什么叫做理财，我也觉得我不需要去做一些什么理财。可是当我长大念完书，大学毕业之后，我发现我没有目标，那我只能去上班，而且呢，我只能把钱存在银行里面。
大学を出てからはずっとサラリーマンをやってました。もうサラリーマン一本ですね、収入源が一つしかないということで、定年を間近に控え、このままでは将来に不安があるということで投資にはいろいろ手を出しました。
我就係一個普通嘅大學生嘅。當我畢業之後，我就發覺我係需要一個投資嘅計劃啦，去好好咁樣去處理我嘅人生同埋我嘅理財計劃嘅。
後來呢，當我遇到了結婚對象，我的對象他是學財經的，而且他在銀行上班。我想說，哇，我的人生有希望了。於是我把我的積蓄通通交給他，讓他去做理財，去做投資。可是沒有想到，過了幾年之後，我發現他做的是投機，而不是投資。於是我們的積蓄都沒有了。又加上呢2個女兒的出生，我從一個本來很富裕的生活變成了月光族，也就是每個月薪水花光光。
バイナリーオプションであるとか FX であるか、日々値段を追ってもう徹夜したこともありますけど、ほとんど変わらないというか儲からない。もうことごと疲れて、もうどうしよう、もう投資はダメかなと思った時に出会ったのが株式投資でした。で、株式投資でもいろいろやり方があると思うんですけど、長期的なやり方があるということで、それにすごい興味を惹かれました。
所以咧，我就特登去參加咗 Katon 老師嗰個嘅VIA 嘅 course。咁我投資之前就真係完全係冇接觸過任何投資嘅，最多都只係喺大學度有上過關於可能係 finance 啊，又或者 account 嘅知識嘅啫。咁就完全冇投資嗰方面嘅任何知識。咁所以我就最後尾決定咗去試下 Katon 老師個嘅 course， 咁然之後睇下會唔會對我嘅生活有啲咩嘅改變咯。
我每天過着這樣的生活，我真的看不到未來。但是呢，在去年我接觸了價值投資之後，我發現原來可以透過學習，讓我們自己翻轉自己的未來，讓我們有機會可以獲得財務自由。
バリュー投資という、長期的な投資をやることによって日々株価を追わなくていい、ゆったりした気分で、長期的に見ていくということで、またリスクを抑えてやるというところで、年も年なんでリスクっていうのはやっぱり避けたいというところもあるんで、そういったのもうまく、自分の希望も叶えられる投資というので、それを実践して、やっているんで、結構ゆったりと精神的にもゆったりとした気持ちで、取り組んでおります。
我今年已經52歲了，而且我有2個女兒，我現在也是單親。我相信我可以做得到，你還有什麼做不到的呢？那讓我們一起加油學習吧。
我本身係冇任何嘅投資嘅知識，亦都冇任何投資嘅經驗，我亦都冇咁多嘅時間可以做其他嘅 part time 同埋 freelance。咁呢啲嘅因素都冇影響到我去學習投資。咁你依家仲喺度等啲咩啊？
我在 VIA 學習投資。
私は VIA の卒業生です。
我係從 VIA 嚟嘅。
私はケイデンのクラス卒業生です。
我是從 VIA 學習的。
咁你呢？
那你呢？
那你呢？